मैं फिर बोला, जैसे ही मैंने का वो कर दिया फिर मैं बोला। हेलो। चलो स्टार्ट करो, वीडियो भी देख लेता हूँ। हाँ वीडियो। हाँ।
या नंदा जी स्टार्ट कीजिए।
गुड मॉर्निंग चेयरमैन साहब श्री बिमल जैन जी, गुड मॉर्निंग।
गुड आफ्टरनून शर्मा जी।
गुड आफ्टरनून, गुड आफ्टरनून, सॉरी, गुड आफ्टरनून। So shall we start, Chairman Sahab, with your
हाँ
permission?
स्टार्ट कीजिए प्लीज।
Thank you, sir. Thank you. So on the behalf of PhD Chamber of Commerce and Industry, I welcome you all for today's webinar on GST compliance activities for closure of FY 22-23, being organized by Indirect Taxes Committee of PhD Chamber of Commerce and Industry. I would like to mention that we have this GST series under our dynamic leadership of our chairman, Shri Bimal Jainji. And we organize such programs for the awareness of our industry stakeholders, industry members of PSD Chamber, so that ease of doing business becomes more and more conducive, and people are able to move forward with the great growth trajectory of their businesses and their more and more participation in the economic growth of India. As we are fast approaching towards the end of the financial year 22-23, it mandates for important activities to be carried out under the GST laws for smooth transition to financial year 23-24. The end of 22-23 tax year is right around the corner, placing a hard deadline on certain planning opportunities that utilize use it or lose it tax allowances. So the concept of taxation is based on the foundation of the welfare of citizens. And because end of the day, we have to create welfare for the economy, welfare for the people, so that ease of living becomes more and more conducive. So with an aim to discuss, the Indirect Taxes Committee of PSD Chamber is organizing this webinar to deliberate on such things, so that this is beneficial for all the members and the stakeholders. Now, I would request our chairman, Shri Bimal Jainji, chair of the Indirect Taxes Committee, to give his theme presentation. Before I call him, I would like to say a few words about him. Shri Bimal Jainji, he is chairman of the Indirect Taxes Committee since the last many years, and he is the executive director of A to Z Tax Corp LLP, tax and law practitioners. He has a vast experience in indirect taxation, GST, service tax, excise, customs, VAT, CST, FTP, DGFT matters, and he represents PSD Chamber at various forums, national and international forums. And recently, our suggestions in the taxation trajectory for the budget for 23-24 was received by the government at a very prominent note, and they considered our so many suggestions. And recently, we have submitted our post-budget memorandum on the taxation announcements in the for the Union Budget 23-24. Under the dynamic leadership of our chair, Shri Bimal Jainji, we are moving ahead, and we are now submitting representations to the departments, various departments of the Government of India and the state governments on the GST-related issues and matters which are raised by the industry members. So, Shri Bimal Jainji, please, for your theme presentation.
At the outset, let me thank all the participants that they have joined on time, and since starting we got 500 plus participants already on Zoom. This program is also live on YouTube as well. Appreciate it. And the topic for today's webinar is again very interesting and important one. GST compliances for closure of financial year 22-23. Important for all of us together. Before I start my theme presentation, and we are going to discuss many pointers which is important for the compliances to be taken care of in GST for the financial year 22-23. See, when GST got started on July 1, 2017, yes, we all know that 4 important pillars, that multiplicity of taxes subsumed in GST, 17 indirect taxes and 23 cess, cascading of taxes to certain extent gone, not there in GST, double taxation, which was an issue in pre-GST era, is being done away in GST, and most importantly, which I normally say, GST law is a Gita, Bible, and Quran, irrespective of any language, religion, race, and caste, because GST law, whatever applicable in Delhi, applicable pan-India, Kashmir to Kanyakumari. So same provision throughout the country. So this is what providing one nation, one tax, one market. This is what the theme of GST. 5 years gone in GST, we are into the 6th year. And in the 6th year, I am going to say to all of you that still we are struggling with. Lot many things which come in our way for GST compliances. There are hurdles, obstacle, and challenges. But to get it prepared, we at PSG Chamber of Commerce always try our best that we can provide the hand-holding to the all trade members. And today's topic, that's why very important that what all point we should consider and keep to our mind to ensure GST compliances for the financial year 22-23. Having said, very recently, Finance Ministry has issued a statement that there's a lot of evasion of taxation. GST evaded by lot many taxpayers, and around 3.11 lakh crore rupees in last 5 years, they have noted that this much of money got evaded by the taxpayer, and recovery is also being made to the tune of 1.03 lakh crore rupees. So looking at the numbers, the kind of evasion which is going on in GST, there's so many reasons for that. And one of the prominent region which I could see that automated GST return system, which was envisaged when GST law got introduced, Section 37 for GSTR1, Section 38 for GSTR2, 39 for GSTR3, 42, 43, 43A for ITC matching and mismatching. But we have seen that GSTR2 and 3 never got implemented. Today, if you are registered in GST, then I know there are two important pillars. One is outward supply. And for outward supply, we are filing GSTR1 and GSTR3B. And then we are reconciling our numbers with GSTR9 and 9C. And when I look at the ITC input tax credit on my purchase, which is inward supply, my credit is being availed in GSTR3B, which we need to cross-check with GSTR2A or 2B. So practically, this return is then get reconciled. So whatever credit coming in my books of accounts, availed and utilized in GSTR3B, we have to reconcile for preparation of GSTR9 and 9C. Having said, let me start some of the important topic which we must take a note of it. I'm not going to make all the pointers. All technical speakers are going to make presentation before you, but important one. When I talk about outward supply or input tax credit, though we are talking about financial year 22-23, April 22 to March 23, but we have to look at the numbers even for the financial year 21-22, and even the numbers which might be reflected in financial year 23-24. So what are the important things which we have to really understand? If I talk about outward supply, which I'm capturing from my books of accounts, then GSTR1, then GSTR3B. So what is important? You must be knowing that in GST, there may be a case that some transaction of financial year 21-22, you may have shown in the period April 22 to 30th October 22, which is a part of 22 and 23. And you know that time limit for availing credit, issuance of credit note, rectification of GSTR1 or 3B is being extended to 30th November of next financial year, pertaining to any relevant financial year or date of furnishing annual return, whichever is earlier. So importantly, you may find that there are some transaction pertaining to 21-22, you may have shown in 22-23. So you have to bifurcate. And these bifurcation is important. You have to put the numbers of 21-22 shown in 22-23 in one bucket. Another 22-23 numbers shown in 22-23 put in another bucket. And third situation, which is yet to happen, maybe some transaction which is pertaining to 22-23, but you have not sown in 22-23, and you're going to sow in the period April 23 to 30th October 23. So it is by GSTR1, which you are going to file by 11th of November 23 or 13th of November 23, GSTR1, and GSTR3B, which is 20th November 23. It at most can be extended till 30th November 23. So 3 buckets need to be kept ready for outward supply and even for the input tax credit. And why these 3 buckets important? For preparation and filing of GSTR 9 and 9C. You have to show these numbers separately. That is what GSTR 9 and 9C. Just to recall quickly, that when you're filing your GSTR 9, so what you have to do, if any outward supply of 22-23 shown in 22-23, then the relevant table would be table 4, table 5, and table 9. But any figure of 22-23 shown in a period of April 23 to October 23, then table 10, 11, and table 14 of GSTR 9. And even when you're filing, you're preparing table number 4 of GSTR 9 or table number 5 of GSTR 9, there's spillover effect. Spillover means to say that maybe your numbers, which is shown in GSTR 1, shown in 22-23, but related to 21-22. So these figures need to be bifurcated. This is the first point. Either outward supply or input tax credit. Coming to the second point, you have to look at your supply, outward supply, which may be taxable. You're charging GST on same. So you have to look at your classification and rate applicable. For classification and rate, it is important you should go back and check HSN code and SSE code. HSN code for goods, SSE code for services. We all know that there is compulsorily mentioning of HSN code and SSE code, 4-digit. The aggregate turnover of any registered person is up to 5 crore in preceding financial year. 4-digit for B2B supply. For B2C, it is optional. But if aggregate turnover is more than 5 crore, then compulsorily mentioning of 6-digit HSN code and SSE code to both supply either B2B or B2C. So you have to go back and check your classification so that you can arrive at that you're applying correct HSN code and SSE code, correct rate of GST is being charged and duly discharged to the government exchequer. If you fails or there is some fault on your part, not picking up correct HSN code and SSE code or corresponding GST rate, there may be a possibility that differential liability may fall back on your head, and which you may require to pay differential tax along with interest and penalty depending on 73 and 74 of CGST Act. So you have to be very, very careful. Another aspect could be exempted. Exempt supplies in GST. No GST leviable because being exempted, and exempt supplies as defined in GST could be either nil rated or exempted by way of exemption notification. So goods exempted 2/2017, services exempted 12/2017, nil rated or non-taxable supplies. So these are exempt supplies. You have to cross-check whether your product and services which you're dealing with is exempted. If exempted, under which entry of this exemption notification, or nil rated, even non-taxable supplies need to be disclosed when you're preparing your return. So you have to really capture those data clearly so that you can arrive at the reconciliation, and that too you need to reconcile with your books of accounts. Next point which I've seen in GST is very interesting one. I've seen that sometime we are making interstate supply, and I can take an example to discuss with all of you. Let's say I'm supplying from Delhi to Maharashtra. It's an interstate supply, IGST leviable. But sometime we make mistake. And to give prominent example to all of you, and why I'm giving this example, just to create importance in your mind, if you treat any interstate supply as an intrastate, there is repercussion. So let's assume I got my factory in Delhi. You all are my buyer at Maharashtra. There are two kind of cell. One is called FOR cell, FOR destination cell. I'm supplying from Delhi to Maharashtra at your premises. It is B2B supply. Quite obvious interstate IGST leviable. In case of ex-works means you as a buyer of Maharashtra comes to my factory in Delhi, and I hand over the goods at my factory premises in Delhi. And dispute and confusion, when I'm handing over the goods at my factory gate at Delhi and location of supplier is Delhi, whether transaction would be intrastate or interstate. I'm sure even as on date, you will find that confusion existing. It will continue to be interstate supply, IGST. In terms of section 10, subsection 1, clause A of IGST Act, where supply involves movement of goods either by supplier, FOR destination cell, or by recipient, which is ex-work cell, because you are going to deploy your transporter truck and pick the goods from my Delhi factory to your premises in Maharashtra, or by any other person. Place of supply would be where delivery terminates, IGST. Even for generation of eBay bill, of course, it is Delhi to Maharashtra. It can't be intrastate. And even for availing credit, when I'm supplying from Delhi to Maharashtra, then it needs to be IGST. Then only credit is going to be reflected in your 2A or 2B. Otherwise, credit going to be disputed. But another confusion which I'm adding further, what happened for B2C supply? I'm finding lot many taxpayer are assuming it is intrastate supply. But to my mind, if value, taxable value is more than 50,000 rupees, 50, even though it is B2C supply, B2C from Delhi, supplier registered to a customer from Maharashtra who is not registered, transaction will continue to be interstate, IGST. Because in terms of Rule 46 sub Rule E, supplier need to mention the name and address for delivery of Maharashtra, including state code, which is Maharashtra, and transaction would be IGST. So there may be a case that we are wrongly treating interstate supply as an intrastate. So we may have charged CGST and Delhi SGST, and we have deposited also, but it is IGST transaction. So what happened? Department will take IGST from you. And what happened? Whatever you charge CGST and Delhi SGST, that will be refunded to you once you pay the IGST liability. Another question which is related to this topic, whether interest is leviable when you pay IGST, let's say a transaction pertaining to 18, 19, 19, 20, or maybe 22, 23, but catch hold in 23, 24. So what happened? Interest leviable, no interest, and refund within 2 years from the date you make IGST payment of wrongly charged taxes, CGST and Delhi SGST. So you have to be very, very careful for treatment, whether intrastate or interstate. Coming to the third component, e-invoicing is the really buzzword and automation. E-invoicing provision made applicable from 1st October 2020 with 500 crore, reduced to 100 crore, then 50 crore, then 20 crore, then 10 crore from 1st October 2022. And hopefully from 1st April 23, it is going to be 5 crore. So e-invoicing, it's compulsorily for the case when it is B2B taxable supplies. So for B2C, it is not important. It is applicable even when supply made to SEZ unit or export. And when we talk about any debit note and credit note, then that has to be through e-invoicing generation. Invoice reference number must be generated. And to cater the need, recently government has notified 4 private IRP invoice registration portal. So just giving a food for thought. I'm an entity, I'm supposed to generate IRN number through IRP, right? But in case I have not generated, what happened in that case? So whether my invoice, which is supposed to be e-invoice with unique IRN number digitally signed with QR code affixed, I have not generated IRN. What happened? Is it a tax invoice? It is not a tax invoice. Whether your buyer can take credit on tax invoice which you are generating without having IRN number, he will not be able to get credit. So lot many ramifications, and we have to be ready. As I said, from 1st April 23, threshold will go down to 5 crore. So we have to really get set ready for this e-invoicing process as well. Coming to the another aspect, which is again important, and we have seen in the past, being supplier, I'm filing my GSTR1 and GSTR3B, and sometimes we make mistake. Let's say my 1 lakh rupees liability, while filing GSTR1, I've shown or wrongly furnished as a 10 lakh. Just 1 zero, extra zero got added. So liability was 1 lakh. With the wrong number furnished, it becomes 10 lakh rupees in my GSTR1. But I will pay only 1 lakh rupees through GSTR3B. So difference in GSTR1 and 3B is a very critical one. And you need to really understand this aspect. If there's a difference in 1 and 3B, what department is saying and what law is being amended as per section 75, subsection 12, it is self-assessment tax. And with recent rule 88C, department is saying they will send you deficiency memo, DRC 01B part A, which you need to reply within 7 days, or you to pay the differential tax. Otherwise, they can go for recovery proceedings without issuance of so-called notice. It's very, very critical. So you have to do proper reconciliation. Otherwise, from legal perspective, I'm of the opinion, in my humble submission, this difference of 1 versus 3B can be self-assessment tax, but recovery can't be initiated. Rule 88C, to my mind, ultra-vires, because there are other provision existing within the GST law, like section 61, scrutiny of return, whereby ASMT 10 is being issued. We got rectification provision within the GST law under section 37. I can rectify my GSTR1 till 30th November of next financial year, pertaining to any relevant financial year. So I'm of the view that rule 88C is ultra vires, but that is how the provisions are evolving, and we have to be careful about. So ultimate objective is do the reconciliation part with the books, GSTR1, 3B, and then get your data prepared for GSTR 9 and 9C. Having said that, in outward supply, other factor could be cross charge. So, supply of goods or services between distinct persons are considered as a cross charge. So entry 2 of schedule 1, the question coming in, which we need to answer, and technical presentation is also going to be made today, that whether this is supply. If supply, what would be the valuation? If valuation need to include employee cost, salary cost. So there are 2 entities where recipient is entitled for the ITC, and there's exempted sector, education, healthcare. What happen in such case? Which provision going to be applicable? What is the valuation? Whether we require to include a salary cost also in valuation for chargeability of GST when we talk about cross charge. So I'm leaving these questions just for the technical presentation. So get it ready on that part. Coming to the ITC, input tax credit. Similarly, as I said, for outward supply, when you're looking your data for ITC for financial year 22-23, you need to have bifurcation, 3 bucket ready. What these 3 bucket all about? Even though I'm looking my credit of 22-23, but I need to carve out if any credit of 21-22 availed in a period April 22 to 30th October 22. So we need to carve out because that is pertaining to 21-22. Similarly, if some credit of 22-23 which are availed in 22-23, then it's okay. We have to show in 22-23, but if it is shown in a period April 23 to 30th October 23, then what happened? It need to be shown separately, and there's separate table existing in GSTR 9, table 12 and table 13 for availment and utilization. So this bifurcation is must. Second point, when you're availing credit, then you have to look at this credit availment is right or wrong. Are you correctly availing the credit? There may be a case that some credit which is ineligible because block credit under section 17 subsection 5. You need to go back and check your credit document whether credit is available. It is not barred as per section 17 subsection 5 of CGST Act. Then you need to have a caution of rule 42 and 43. What is this rule 42 and 43? If common ITC pertaining to input and input services, if used for the exempted supply, then pro rata reversal. Rule 43 on capital goods. So are you doing that? Maybe you have provisionally reversed some credit, common credit on the basis of exempt supplies, but at the year end, when you finalize the number, your exact figure will come out. What exactly you were supposed to reverse, whether you have reversed that exact amount. If differential, you must reverse by the defined time period that is being prescribed in the GST law. So you have to really check and verify all these things. Now, when I'm talking about ITC, next important one and very interesting one, we are finding in GST many challenges. When GST got started, there was 4 conditions for availing credit. Recipient should have tax invoice. He must have received goods or services. His supplier must have paid taxes, and recipient regularly filing GST return. But you know that from 1st January 2022, the 5th condition got inserted, and that condition is saying that credit which is availed by you in 3B must match with GSTR 2B, with GSTR 2B. So we have said in our previous webinar and seminar that my credit is not dependent on 2A, but it is dependent on 2B, and that too from 1st January 2022. There may be a case that credit is not getting reflected in 2B for number of region, and number of region could be your supplier is making mistake. B2B supply is shown as a B2C. It is not going to be auto-populated in 2B. I need to mention your GST number, but wrongly mention the GST number of some other party. It is not going to be reflected in your 2B. It was interstate, Delhi to Maharashtra, but if I'm showing wrongly as a Delhi, then it is showing but ineligible because place of supply is shown Delhi, and whereas Maharashtra registration credit will not be available. Maybe a case that I'm not filing GSTR1 as a supplier, but paying the taxes through GSTR 3B. So what happened? It is not going to be auto-populated in GSTR 2B. So what to be done? You have to sit down. You have to first check your book credit, then your e-credit ledger, and then you have to take your GSTR 3B and summarize how much credit you have availed. And depending on the credit availed, there may be 2 possibilities: excess claim, but not coming in 2B, or lower, you have not claimed to the extent it is eligible to you. So you have to really work out the reason why I have not availed. Of course, for availing credit of 22-23, time period would be 30th November. Importantly, GSTR 3B of October 23, which is going to be filed either on due date 20th November or latest by 30th November 23. But you need to check, cross verify and everything. With this scenario, there may be two possibilities. That your supplier is making mistake, hence you are not finding your credit entry in your GSTR 2B. Similar is the case that you being a supplier also making mistake and your buyer is also not getting the credit entry as supposed to be auto-populated in a GSTR 2B. So this is the time to reconcile everything, to check everything, to match everything. Because this is the financial year closing, you have to really cross-check, verify, and do all this aspect in a proper way. Coming to the next component, reverse charge method, RCM. RCM credit, we have seen not getting auto-populated in 2B. It is dependent upon when you pay, you avail the credit, and they are the provision also. So when I talk about credit availment, there may be three possible situations. Credit availment on the basis of invoice raised by your supplier, registered supplier. And that must be auto-populated in your GSTR 2B, apart from 4 other conditions. That is what you have to keep to your mind. And you have to also keep to your mind the latest changes in Finance Bill 2022, not 23, and made effective from 1st October 2022, but rules are yet to be notified. There are 6 restrictions as per section 38. Even though it is coming in 2B, but would be shown as ineligible. And there are 6 restrictions as per section 38. So those rules are yet to be notified. Quickly running those restrictions for new registration of a supplier for specified time period. If supplier defaulting in payment of tax for specified time period. If supplier having differences in GSTR 1 and 3B beyond the specified limit, if supplier 2B and 3B is not matching and crossing specified limit, or credit utilization as per 49 subsection 12 is not being followed by supplier or any other restriction. So rules are yet to be notified, but these are 6 restrictions placed in under section 38. So we have to be very, very careful. Reverse charge, there may be 2 situations. That they're registered supplier, but subject to RCM. So being recipient, you are availing from registered supplier, but RCM applicable. So you have to check that are you paying RCM liability in time as per time of supply provision first. And in that case, time limit to avail credit document generated by registered supplier, though subject to RCM, that would be the time. For unregistered suppliers subject to RCM like GTA, advocate, and RCM applicable. So you have to generate self-invoice to yourself as per section 31, subsection 3, clause F, rate bit rule 36P. In that case, self-invoice going to be the document for availing credits, provided you pay the liability as per time of supply provision. If I say time of supply for RCM for supply of services, then date of payment or date following the end of 60 days from date of issuance of invoice would be the POT. So that's what you have to keep to your mind. If you don't pay on time, interest leviable, that to 18%. So RCM to be paid in cash, interest quite obvious in cash, and interest would be 18% leviable, of which no credit. When I'm talking about credit, other factors could be that you have to check if recipient as a buyer, you fails to pay within 180 days. What is the repercussion? You have to really closely watch those provisions, and you have to really reconcile all those parameters. Having said that, now 2 or 3 components, because time is the pause, I do not want to cross over, but I want to do some interplay of GST versus income tax, and that too as a financial year closure 22-23. You'd be recalling that from last year when we talk about tax audit report, form number 3CD, we need to capture total expenditure, right? With a capital expenditure or revenue expenditure. And now these need to be bifurcated. that expenditure which is incurred from registered GST supplier. So registered GST supplier is raising invoice to you, which is inward supply for you. You have to bifurcate those figures, maybe capital, maybe revenue expenditure. From non-registered supplier, those who are not registered in GST, so your total expenditure is going to be bifurcated, first from registered supplier, then from unregistered supplier, then from supplier who's supplying exempted goods or services, means either nil rated or exempted by way of notification, or non-taxable supplies. Fourth, when you're procuring from composition dealer, so composition dealer is not supposed to charge GST on his invoice. Bill of supply is relevant, but you need to bifurcate those expenses. And third is the residue category, all other expenditure. So these expenditure need to be bifurcated when you are availing your ITC and looking at your purchase registered, even for income tax compliances. For tax audit report, form number 3CD, you have to bifurcate and you have to capture those numbers even for your income tax purpose, but related to GST. I do not know whether you are prepared or not, but get set ready. And one more change of income tax, which is connected to GST for drawing your reference, that section 28. And where TDS provision is being prescribed when you are supplying something in cash or in kind, which is called for promotion, which you are giving to some dealer, distributor, that may be gift, that may be travel, that may be hotel stay, whatever, on achievement of milestone. The compulsory provision of TDS deduction under Income Tax Act. And then you have to look at those expenditure, whether these expenditure are really not falling under section 17, subsection 5, clause H, goods lost, stolen, destroyed, written off, or disposed of by way of gift or sample, and they're the repercussion. And just to create one example, that gold coin, which I have purchased as a company, and I paid the GST on same. And I'm giving this gold coin to my dealer and distributor on achievement of milestone. So first implication, GST paid on gold coin, whether I can avail credit, because department going to dispute it is a gift item. But I will say it is for promotion of my sales in the course of furtherance of my business. Under Income Tax Act, when you're giving free to your dealer and distributor, then section 28 TDS provision will come into the picture. So I'm doing the interplay. Maybe next webinar, we can do this interplay of GST and income tax for closure of financial year 22-23. But today I thought of inviting you, igniting your mind and creating pointers for all of you, that what could be, what are the pointers from GST perspective, important, maybe outward supply, maybe ITC, and maybe other litigation. There are many other litigation going on, which may be on outward supply, maybe on ITC. So in terms of your compliances, litigation of 17, 18, and 18, 19, what to be done? How can I close these transactions in 22, 23? There may be a case RCM liability of 17, 18, and 18, 19 from unregistered supplier. You did not pay. But now it is coming out and you want to pay in financial year 22, 23. So question which will come, do I require to pay? Of course you're required to pay. You have to pay along with interest. Yes, of course you have to pay along with interest, because POT may have arisen. Self-invoice is the relevant document, but credit available only on the basis of payment. What happened? Time limit. Section 16, subsection 4 is applicable when it is from unregistered supplier, RCM liable. So those kind of litigation point, and there are certain credit which is restricted because of time limit as per section 16, subsection 4, what to be done? If we got notice issued on 2A versus 3B, what to be done? How to close such transaction in financial year 22, 23 need to be taken care of. So for that also, we are going to have technical presentation today. So overall, summarizing this theme for igniting your mind to be ready for presentation, for important compliances, for closure of financial year 22-23, and thanking my all the speakers who are coming and joining today. And today we got full house, 500 plus on Zoom, and YouTube live is also going on. So it's a great opportunity both way for the speaker and for the audience who is watching today. And I'm sure they would be enjoying today's webinar on GST compliances for financial year 22-23. Thanking each of the participants. Thank you very much.
Thank you, sir. Thank you very much. Now I request for a technical presentation to Ms. Simran Arora. His presentation GST compliances pertaining to outward supply. Ms. Simran is qualified chartered accountant by profession. She is over 3 years of experience in indirect tax, legal metrology law, and advisory role. He is associate with Nitya Tax Associates. Please, yeah, your screen is showing.
Yeah.
Please start. Yeah, thank you.
Sir, am I visible and audible?
Yeah.
Okay, thank you.
Thank you.
Good afternoon, everyone. At the outset, I would like to thank PhD for giving me this opportunity. So, Bimal sir has rightly said that March is an important month for taxpayers and industry at large, as this month requires the taxpayers to be well equipped with all the compliances for the next financial year, and also to look back to the previous financial year, wherein they can see what all compliances, tax positions they have adopted. So with around 2 weeks left for March closure, the topic given to me is with respect to GST compliances, specifically with respect to outward supplies on the closure of this financial year. So for this topic, I have divided the presentation into 3 parts. First is the specific activities which are to be done at the financial year closure. These are basically the dates which are coming from the law itself that you have to comply with. Secondly, are the key considerations which must be taken at the financial year closure. These can include whatever past positions you have taken and whatever positions you are going to take in future as well. And these are majorly from the practical experience which we have had in dealing with the clients. Next are the different types of reconciliations which are required to be done. As you all are aware that department is very active as on date, and it requires reconciliations of different returns, and that too with a short period, within a short span of time. So businesses need to be well prepared with the reconciliation, so that whenever any reconciliation is asked from them, they can readily provide the same to the department. Starting with the specific activities which are to be done on the financial year closure. First is with respect to statutory documents. As you all are aware that the GST law requires different documents to be issued in different scenarios, like tax invoice in the case of taxable supplies, bill of supply in case of exempt supplies, payment voucher for RCM supplies. So in all these cases, there's a mandate under law that the serial number of these documents must be unique for each financial year. So from April onwards, a taxpayer can adopt multiple or single series of documents. Second is with respect to e-invoicing applicability. E-invoice is applicable on the persons having aggregate turnover exceeding 10 crores in the preceding financial year. So the taxpayer can assess what aggregate turnover do they have in this financial year, so that they are well equipped with the IT systems for the next financial year. Also, there was a news going on in the industry that e-invoice will be made applicable for taxpayers having turnover between 5 to 10 crores. So in this regard, I wish to highlight that CBIC has recently clarified that there is no such proposal in the near future as of now, because they have not received any recommendation from the GST Council with this respect as of now. Thirdly is with respect to dynamic QR code applicability. So a registered person is required to mention dynamic QR code on B2C invoices where his aggregate turnover during any of the preceding financial years starting from 2017 exceeds 500 crores. Either that person can show dynamic QR code on the invoices, or it can display it at the time of sale and give a cross reference of the transaction ID on the invoice. Next is with respect to letter of undertaking. As you all are aware that the GST law provides two options for making zero rated supplies. First is on payment of IGST and further refund. Second is without payment of IGST under LUT. So it's a good time for taxpayers to avail the fresh LUT for the next financial year, as the option is available on the GST portal. Next is with respect to HSN digits on invoices. As Bimal sir also summarized during the introduction that the GST law requires 4-digit HSN where the aggregate turnover of a person in the preceding financial year is less than 5 crores, and 6 digits HSN where the aggregate turnover exceeds 5 crores. So here I wish to highlight few points. The first point is with respect to e-invoicing portal. So the e-invoicing portal is not in line with the law as on date. It accepts 4-digit HSN on the invoices even when the taxpayer is required to mention 6-digit HSN on the invoice. So there was a recent advisory which was issued by the e-invoicing portal wherein they have mentioned that from a future date, the e-invoice portal will stop taking 4-digit HSN and it will be mandatorily required to mention 6-digit HSN on the invoices wherein the turnover exceeds 5 crores. Also, one more clarification with respect to HSN digits. There is a requirement to mention 8-digit HSN for certain chemicals, for certain supply of chemicals, which are there by way of notification. Next is with respect to goods transportation agencies. In the last year itself, the GTAs were given two options to discharge tax under forward charge mechanism. First was 5% without ITC, and the second was 12% with ITC. So for this, the GTA have to adopt the option of taking forward charge mechanism on the GST portal for the next financial year, and this option is available on the portal till tomorrow, so that they can opt for this option, and throughout the year they'll be discharging tax under forward charge and they'll be mentioning same on their invoices as well. Next are the key considerations which are to be taken into account. As you all are aware that the GST law is ever evolving since the beginning, and there are many amendments which have come with respect to law and the interpretation issues in the recent past as well. As we all have seen Supreme Court judgments on various topics, be it HSN classification by way of Westinghouse judgment, be it RCM liability on ocean freight by way of Mohit Minerals, then secondment of employees by way of Northern Operating. So all these Supreme Court judgments, since these are the law of the land, so these require a taxpayer to make changes in certain tax positions which are adopted. Also, since these are given in the mid of the year, taxpayers also need a cooling period to interpret those. So March gives a good time for the taxpayer to look back into what all changes have come throughout the year and to adopt any changes or adopt any change in tax position via the different amendments which were made throughout the year. So first is with respect to tax positions. As I already discussed, taxpayers can look into different important key transactions which have happened throughout the year or which can happen in the future periods as well, and see whether they are correctly discharging tax on same, and they can see whether they are correctly adopting correct HSN and GST rates as well. Second is with respect to GST returns reporting. there are many transactions which happen throughout the year which might be missed by the taxpayers. These transactions can be deemed supply or the exempt supplies which are generally missed to be reported by the taxpayers. So taxpayers can take this opportunity and reconcile through the all 12 months and report the total turnover of these transactions in the March return as itself, so that there are less reconciliation items in the balance sheet and during filing annual returns as well. Also, taxpayers can see whether any transaction was missed to be reported or was incorrectly reported. So they can take this opportunity to correct the same in the March returns, though the timeline to correct the same is still November 30 of the next financial year. Next is with respect to documents issued. As I already mentioned that the GST law requires different documents to be issued in different scenarios. So generally what we have seen is taxpayers miss to issue self-invoice in case of RCM supplies from unregistered person, payment vouchers in case of RCM supplies, then bill of supplies in case of exempt supplies. So taxpayers can look back and see whatever transactions, these type of transactions have happened in this year, and can suitably issue these documents. Also, one more important change which came on July, with effect from July 5, 2022, was with respect to the persons who fall under e-invoicing. So Rule 46S was introduced, wherein it was mentioned that where a person who is liable to issue e-invoice but he is not issuing e-invoice, then he is required to mention a declaration on the invoice that though he is liable to issue e-invoice but he is not issuing e-invoice. So these are basically the cases of B2C sales where the person is not required to issue invoice, or the GTA suppliers wherein they are specifically exempted to issue e-invoice. Also important to highlight here is that in the agenda to the council meeting in which this change was introduced, it was specifically mentioned that this change is not generally for the GTA or the SEZ suppliers, wherein they are specifically exempted from e-invoicing. But we suggest taxpayers to mention that declaration on the B2C supply invoices as well, so that they are well compliant with the law. Next is with respect to the GST registration certificate. Throughout the year, there might be cases wherein a new place of business is added or removed, or a new director is added or removed. So the taxpayers can look whether their GST registration is updated or not. Next is issuance of credit notes and debit notes. Though the last date of issuing credit note for this financial year is November 30, 2023, but the taxpayers can look into transactions such as sales returns, etc., so that their balance sheet and the GST returns as on date is sorted. Also, for debit notes, taxpayers can see wherein the price increase is agreed well in advance. So in cases it is agreed well in advance, then the taxpayer knows that he has to discharge tax on same on current date. So they can consider discharging same to avoid any interest liability in future. Next is limitation periods. There are various scenarios wherein refund is available to the taxpayer, like in the case of export of services with payment of tax. So taxpayers can look whether refund is available to them and can relook for the limitations period as well. Next is Aadhaar authentication. It is mandatory for the persons who are applying for a new GST registration. Also, whenever a person is applying for refund or is applying for revocation of cancellation, it is mandatory. So you can do this well in advance so that you are saved from the hassle of doing it later when the situation arises. Then there might be the scenarios wherein a person has made tax export under LUT, wherein the LUT was not obtained for this financial year. So the GST portal as of now allows a taxpayer to obtain LUT for this financial year as well. Also, there is a circular which says that in case LUT is missed to be obtained, they can obtain since it is a procedural lapse only. Next is with respect to job work transactions. As you all are aware that a registered person is required to bring back inputs and capital goods or supply it from the place of job worker within 1 year and 3 years respectively. So it's a good time to track age whether the inputs or the capital goods which were sent out for job work, have they exceeded that time limit or not, and in case they have exceeded, then this must be deemed as supply, and tax and relevant interest should be discharged on this. Secondly is with respect to goods sent on approval. So in case the goods sent on approval have been there since last 6 months, so in that case, if they have not been returned after 6 months, so it will be deemed as supply, and you can track age the age of these goods being sent out, so that relevant GST and interest is discharged timely. Next is with respect to TDS and TCS. As you all are aware that whenever we are making any supply to government, then in certain scenarios, the government is required to deduct tax as source. Also, when you are making supplies through ECOs, then ECO is required to collect tax at source. So in those cases, whatever tax is deducted or collected, it is reflected on your GST portal, and you have to take credit of that so that the amount appears in your cash ledger, and you are able to discharge the GST liability using that. Next is with respect to advances and unbilled revenue. You must look into what all advances are left to be adjusted and what all revenues are left to be billed, so that relevant adjustments can be taken in the balance sheets as well. Now we'll be covering the specific transactions which we have seen in the last year were under dispute, and the department has raised many points with respect to same. First is cross charge and ISD. Since we'll be discussing this topic in detail in the coming sessions, I'll just brief about it. So Schedule 1 deems the transactions without consideration between distinct and related persons as supply. So in the case of transactions between distinct persons without consideration, department usually demands tax deeming it as supply. So in those cases, taxpayers need to take a call whether they'll be doing cross charge or whether they'll be taking ISD registration for distributing credit of the common services which are availed by them. Next is with respect to related party transactions. These majorly include employer-employee transaction, wherein employee is providing any service like canteen, transportation, insurance to their employees, and these are simply expensed off from the P&L account, and they are not noticed in general. So the taxpayers can look into these transactions and take a call that whether they should discharge GST in these cases or not. In my view, we must discharge GST on the services which are provided by employer to employee, as these are well within the course of business of the employer, though there are very contradictory rulings on this aspect. Next is again a Schedule 1 transaction wherein a permanent transfer or disposal of asset is made where ITC is availed on any business asset. So these transactions are generally missed, and you can see whether any such case has happened or not. Next is with respect to valuation of sale of used goods. So section 18(6) requires a person to adopt a particular valuation mechanism on the sale of capital goods. So we must assess that whether we have used valuation as per that section or not. Next topic is with respect to reconciliations that can be performed throughout the year. Starting with the first reconciliation, that is GSTR 1 versus GSTR 3B. So in this reconciliation, generally what taxpayers miss is that the adjustment of credit notes is generally missed. Second is the reflection of exempt supplies or sale to SEZs or export supplies are misreported in GSTR 3B. So those can be corrected in GSTR 3B of this month itself, or they'll become a reconciliation and can be corrected in the future months as well. But the important thing is that the taxpayers should be aware of this well in advance, so that when the department comes, they are answerable to them. Second is the reconciliation of books of accounts with GST returns. So talking about the transactions which generally become the reconciliation item, first is the exempt supply, that is the interest from fixed deposits, etc. Second is the deemed supplies, financial credit notes, etc. And also the provisions which are there in the books of accounts but are not accounted for in 1 and 3B. Third is with respect to e-way bills and the GST returns and books of accounts. So in this, as you all are aware, that e-way bill is required to be made only in case of movement of goods where the consignment value exceeds 50,000. So in the cases where the consignment value is less than 50,000, or there is no movement of goods like in X work sales, those cases will become a reconciliation item in this case. Next is with respect to e-invoicing. So in this e-invoicing versus the returns and the books of accounts. So in this case, the general reconciliation item is the cancelled invoices and the time lag which happens from e-invoice portal to GSTR1. The last point is with respect to export of goods with payment of IGST and IceGate portal. So there might be the cases where the shipping bill number or the amount is differently reflected in both the portals. So in those cases, the refund might get stuck. So the taxpayers must look into it and make relevant adjustments in GSTR1 or pay relevant liability through GSTR 3B so that they can get the refund appropriately. So this was all from the GST outward compliances perspective. Thank you.
Thank you. Thank you very much. Hello. Yeah. Thank you. Thank you, Simranji. Now I would request to see Tushar Agarwal ji, Tushar Kumar Agarwal, to present presentation on compliances pertaining to GST ITC. See, Tushar Agarwal is a co-founder of Tatum Advisor. He has more than 10 years experience in indirect tax. He has worked more than 10 years in Lakshmi Kumar and Sidaran attorney. He was also deployed by Goods and Service Tax Network for GST implementation and has worked closely with the Government of India. He has worked extensively with the Government of India designing the GST returns, audit and other formats. Tushar ji.
Thank you, sir. Simran, can you please...
Ms. Simran, please exist your PPT, please.
Sure, sir.
Yeah.
So is it done?
Yes, yes. Sir, please share your PPT. Now comment.
At the outset, I would like to thank PSD for giving me this opportunity. Friends, in this session, we will be discussing the ITC compliances for closure of financial year 22-23. The first important point is the ITC reconciliations, which we have to undertake for financial year 22-23. So there are multiple ITC reconciliations which we have to undertake. The first one is reconciliation of the ITC in my books of account versus the ITC availed in GSTR 3B. That is my GSTR 3B versus books of accounts reconciliation. This is very important. We have to reconcile why my books of accounts are not matching with the credit availed in GSTR 3B. What we have witnessed during various anti-evasion, DGGI inquiries or audit inquiries is that they always check your books of account, how much credit you have availed, and always compare it with your GSTR 3B return and thereafter with your GSTR 2B. So there can be various reasons for difference between your books of account as well as GSTR 3B. And in fact, we have seen that there are various entries which people make in GST 3B, but they forget to make the same in books of account. And now it is the time to make all those entries. I will just discuss some of the sample item forming part of such reconciliation. First one, reversal of ITC on account of rule 42, 43, etc. It may so happen that I might have reversed the same in my 3B, but no entry made in books of account. Similarly, there can be reason on account of refund claimed on account of ITC accumulation. So there is always a debit entry in my returns in my portal, but the same is not in my books of account. So we have to make sure that all these entries are present in my books of account. Another important parameter is the spillover effect, which we have discussed earlier also. I have to take into consideration the data of financial year 21-22, 22-23, and 23-24 also to ultimately come to a final reconciliation between my ITC as per books as well as per GST 3B. Further, we have seen that there are cases wherein people have paid taxes to DRC 03. So they pay tax during investigations, etc. using DRC 03. ITC is utilized. A corresponding entry in books of account has to be made. So we have to reconcile our books of account with our GST 3B and ensure that whatever is the reconciliation difference, a proper justification is available. All this is going to help in our GST 9 and 9C. Further, if there is any entry which is left to be made in books of account, now it is the time to make all such entries. Once this particular activity is done, the next step is to reconcile my GST 3B data with my GST 2B on consolidated basis. So we have to reconcile whatever credit I have claimed as per GST 3B versus GST 2B for the entire financial year 22-23. On reconciliation, we will come to know that there are various reconciliation scenarios that will arise. Say I have recorded the invoice in my books of account, but it is not coming in my 2B. Vice versa, something coming in my 2B, not in my books of account, or some mismatches, etc. Based on such updated reconciliation, an action has to be undertaken, which we can divide it into two parts. First is the action which I have to undertake, the communication with my vendors. Second is my internal actions. Coming to the internal action first, the most important thing which we have to see while undertaking such reconciliation is the invoices which are auto-populated in your GST 2B, but the same is not found in your books of account. I repeat, the invoices which are auto-populated in your GST 2B, but you have not claimed the credit of the same in your books of account, the same is not yet recorded in books of account. The reason can be these invoices have not reached the account stream yet. It's still at the site. It's still at with some other team. There are cases wherein like airline invoices will be auto-populated in GST 2B, banking invoices are auto-populated in GST 2B, but the same is never reached to the account stream. So we have to make list of all those invoices which are coming in my 2B, see whether these are my vendors, and try to locate all those invoices and try to record the same in the month of March. So that's the most important activity, which will also result into a beneficial cash flow for various industries. So recording of invoices coming in GST 2B, locating it and recording the same in March month is a very important exercise which we have to undertake. Second, an important aspect which generally happens is like I make a wrong book entry. See, I have taken ITC pertaining to one GSTN in another GSTN in my books of account. It may be in returns I have claimed correctly, but sometimes it happens that in books of accounts wrong entries are made, or even in returns wrong entries can be made. Now it is the time to correct. I can see, I have to check whether I have made the entry in my books of account in the correct state and not in the wrong state. In fact, if we see the departmental audits which are going across India, they always ask for the state-wise trial balance, etc. So they always ask state-wise books of account, state-wise ITC, etc. as per books of account. So this is an important aspect which we have to keep in mind. Third is any unclaimed ITC. There are cases wherein you actually expense of the ITC and you don't record the ITC separately, even if it is eligible. So we have to do that ledger mapper scrutiny to ensure that no ITC is left. If something is left, I can take it out from the expense and book it separately under the ITC part. Moving on to the communication with vendors. this is the right time to communicate to the vendors. If I have recorded an invoice in my books of account, the same is not auto-populated in my GST-2B, let's coordinate with the vendors. Let's give an intimation to them. Let's give an intimation for any mismatch in taxable value or tax amount if they're with the vendors. It's not that this communication has to be done in the March month. We still have time to do it till September, October. But since now we will be consolidating and reconciling for the entire financial year, let's start this activity at the earliest to ensure the same is completed on timely basis. In fact, one of the issues which we are finding these days is that if vendor has uploaded in GST-2B, they have filed the returns also 3B, etc., but their registration got cancelled sumo to retrospectively. Department sent notices to us. So we also have to see, while undertaking all those reconciliations, the status of the registration of the vendor and accordingly communicate with the vendor. So reconciliation of 2B versus books of account versus GST-3B at financial level is a most important exercise which we have to undertake. Friends, coming to this recently Rule 37A. So it's not just that you are free if you reconcile that whatever credit I have availed in my books of account, it's matching with my GST-3B. Whatever is coming in my GST-3B, the same is matching with my GST-2B. The vendor has filed GST-1 coming in my GST-2B. Good enough, my role is completed. No, that is not the case. Recently introduced Rule 37A specifically provides that. It's not only that you have to check that the credit has been auto-populated in GST-2B, but also see that the corresponding form GST-3B for the relevant tax period has been filed by the supplier. So it is your duty to check that supplier has filed GST-1 as well as GST-3B. Rule 37A specifically says that if the supplier has not filed GST-3B by the end of 30th day of September following the end of financial year in which the ITC has been availed, the recipient has to reverse the credit, and whenever supplier files GST-3B subsequently, you can re-avail the credit. So accordingly, we have to see that we have to make a reconciliation of the GST-3B status of the vendors, whether GST-3B has been filed by the vendors or not. If not filed, we have to go to them and ask that them to file GST-3B or retain their amount, whatever, etc. So that is also an important part which we have to undertake. Moving on to the next important part, payment to vendors within 180 days. Friends, there is a specific provision under the GST law, Rule 37, which provides that a registered person to make payment to the supplier of goods and services within 180 days from the date of invoice, failing which the recipient is required to reverse the input tax credit along with interest. So what we have seen practically during investigations and audits, department always have this creditors figure in your balance sheet, which you will be finalizing. They say this much of amount is being shown as creditors. Please give me the aging report of all these creditors, whether they are due for more than 180 days or they are due for less than 180 days. If more than 180 days, reversal is warranted. So we have to make sure that whatever amount I am showing in my as creditors in my balance sheet, I check the corresponding invoice date of all those vendors and see if the condition of 180 days is met. If it is not met, I should reverse the same in the month of March and accordingly take credit in future whenever I make the payment. At this juncture, one important aspect which merits consideration is the treatment of retention money. Practically, what happens is retention money is an amount which you actually hold on account of performance guarantee, etc. It has not effectively become due, you hold it on account of performance guarantee. Say there is an invoice of a vendor, ₹100. You have paid him 95 rupees, 5% is the retention amount. Your accounts is showing vendor account payable 5 rupees. So at ground level, department always come and dispute that your vendor of ₹5 is outstanding. Please reverse the credit, even if it is in respect of retention money. See, from a legal perspective, we can all argue that when I hold retention money on account of performance guarantee, it is not that I have not made the payment to the vendor. It's just that I have made entire 100 rupees payment to the vendor and then retaining 5 rupees separately on account of performance guarantee. I could have taken bank guarantee or any other guarantee also. So it's just one of the form of retaining the amount. And it's not that I have not made the payment to the vendor. In fact, we have Hindustan Zinc judgment for service tax regime. Even in GST, we can make an argument that it is not a failure to pay the tax. It is as per my contract, that is 5% amount is retained, and hence it's not a failure to make the payment. All those legal arguments are available, but from accounting adjustment point of view, from your year-end closing point of view, one important thing which we can do is that please shift your amount from vendor to the retention account. You have a separate retention security account separately. Shift this amount from your, instead of showing it as payable to the vendor, show it as retention amount, performance guarantee amount, etc. Make a separate ledger, and this will actually help us in defending the case before the authorities, which we have witnessed during our practical experience. Moving on to the next important point is the scrutiny of your expense ledger. 17.5 contains list of goods and services on which credit is not available. So I have to scrutinize all my ledgers, those favorite ledgers which are always asked by the authorities: staff welfare ledger, promotion ledgers, motor vehicle related expense ledger, traveling related ledgers, insurance related ledgers, credit not available on gift samples, etc. So when I say we have a specific sales promotion ledger, we have a specific advertisement ledger, etc. So there two kind of activities can be there. Say if you distribute gifts, if you distribute samples, credit not available, you show the same in sales promotion ledger. Second is advertisement activity or some discount schemes or some other schemes on which credit is actually available. That also you show under the same ledger. So what we suggest is that if you can, in fact, for all those sales promotion ledgers, etc., you can bifurcate it into two parts. One is the expenditure on which credit is availed. Second is the expenditure on which credit is not availed. This will help you in future in and making the department understand that these are the transactions on which credit is available. These are the transactions on which credit is not available. All the capital expenditure which you have undertaken, please scrutinize clearly. Department always come and see what are the capital expenditure undertaken by the company and whether my restriction under section 17.5 in respect of bus contract services for construction is hit or not. That is an important ledger we have to take into consideration. Next is your motor vehicle ledgers, insurance ledgers, etc. So a complete ledger scrutiny to the maximum extent possible. Friends, in fact, during this closing, we also make various in-days adjustments and various accounting entries. Let me give one of the example: impairment of assets. As per the accounting policy, we reduce the value. There can be many other reasons for reduction of value. Maybe even for inventory, you may reduce the value, etc. The issue arises. 17.5H says if goods are lost, stolen, destroyed, written off, or disposed of by way of gift or free sample, ITC claimed in respect of such goods is required to be reversed. The question arises: if I am reducing the value of my assets, reducing the value of my stock as per the accounting policy, is it a write-off? If it is a write-off, whether section 17.5H is hit, I have to please see the word written off in section 17.5H is used in the company of the word lost, stolen, destroyed, disposed of by way of gift. So accordingly, if you are writing off for the reason that your goods are no more required, your goods are no more usable, your goods are lost, for that reason, if you are writing off, then only your reversal will be triggered. If your written off is on account of an accounting adjustment, accounting policy, on account of say impairment of asset or any other policy, you are not required to reverse the credit under section 17.5H. An important point. So at the time of finalization of my March accounts, all the writing off activities which I am undertaking, I have to see the corresponding reason for writing off my assets or stock. If it is on account of accounting entry, no reversal required. If it is on account of asset or stock no more usable, then there may be an ITC exposure. Similarly, there are cases wherein at the end of the financial year, you do a review of your physical inventory, a physical check, and there various physical losses are found. Please review all those transactions, whether any ITC reversal is required or not. Please specifically see the insurance claim transactions. Insurance claim. See, insurance claim is there when something is destroyed. See what is destroyed and whether an ITC reversal is required or not. So March is a very important month wherein scrutiny of all these ledgers will actually have an impact on our ITC reversals. Moving on to the next important point is on account of Rule 42-43 reversals. Friends, if I am engaged in providing taxable supplies as well as exempt supply, I have to reverse the credit, common credit, to the extent of my exempt supply. So we have a specific provision under the GST law. We have a specific provision for real estate sector. We have a specific provision for non-real estate sector. Non-real estate sector works on reversal based on the turnover of exempt supply upon total supply. So firstly, you have to reverse on monthly basis, and thereafter at the end of the year, you have to undertake this exercise on yearly basis. And if there is any excess reversal, you have to do the same by September month of the following. However, important point to be noted is that even though law says that you may reverse it till September of the following financial year, the interest meter starts from 1st of April. I repeat, your interest will be levied from the April month itself. So it is always advisable, if the rule 42-43 working can be done for the entire financial year in the month of March only, and if there is any excess reversal, you can revert the same in the month of March GST 3B, so that interest exposure is not there. So this activity of recomputing the ITC reversal under Rule 42 at the year end can be done in the month of March itself, resulting into saving of any interest exposure. Apart from that, practically what we have seen is that generally industry is of the view that I'm not supplying any exempted product, I'm not manufacturing any exempted product, there is no exempted services, Rule 42-43 is not applied. There are few transactions which are generally missed by them. Say trading or in securities. Trading in securities is also an exempt supply. We have to make sure that if I'm trading in securities, it's an exempt supply. 1% of the sale turnover is treated as exempt turnover. I have to accordingly calculate the common ITC and reverse proportionately. Similarly, there are cases wherein you make recovery from the employees, say recovery of residential dwelling from the employees, or recovery of canteen charges from the employees, which is chargeable to 5% with no ITC. That is also treated as exempt supply for the purpose of ITC reversals. So these are the areas, these are the exempt supplies which we have to drill down and accordingly see if I can reverse the entire credit in the month of March. I can do that reversal scrutiny now. And this reversal scrutiny is not only limited to input and input services. It is also applicable for capital goods under Rule 43. And what we have seen is that many people follow reversals of Rule 42, but generally capital goods reversal is not done. So this, what we discussed, was for the non-real estate part. And for the real estate part, we have a specific provision that I have to reverse the credit based on the carpet area of the unsold unit. So if in a project there is 100 units, 20 units remains unsold on the date of occupation certificate and 80 units are sold, then the ITC pertaining to unsold area based on the carpet area of unsold area upon total area has to be reversed. The law specifically says, say if you have received the occupation certificate, say in June 2022, you can revert the same till March 2023 because interest meter will start only from April 2023. So if any occupation certificate is received in 22-23, I can recalculate my reversal and reverse the same in the month of GST 3B of March month. Otherwise, from April month, my interest will be triggered. So compliance of Rule 42-43 is an important aspect which has to be kept in mind. Moving on is the bifurcation of input services and capital goods. This is something which we have to make sure that we are having this bifurcation. It is required for multiple purposes. One is obviously in your GST 9, this is required. Input, and though GST 9 says input services can be clubbed, capital goods has to be separately shown, but it is always advisable to have this bifurcation in your books of account. There should be an MIS report wherein you can extract this data. Even during audits, investigations, this bifurcation is called for. Even for your Rule 42-43 reversals, this bifurcation is required. So this is an area wherein we have to make sure that for the financial year 22-23, we have this particular bifurcation. The next important compliance is the condition for availing credit. And one of the condition is that I should have a valid invoice. Rule 48.5 specifically says, any invoice issued in a way other than the manner specified by a person to whom provision of e-invoice is applicable shall not be treated as an invoice. So if a vendor is required to issue an e-invoice, but you have not got the e-invoice, he has issued a normal invoice, though e-invoice provision is applicable on the vendor, he has not followed, issued you a simple invoice, you have taken the credit, invoice coming in GSTR 2B, he has filed GSTR 3B also, all conditions satisfied, still credit is barred because of Rule 48.5, which says that this will not be treated as a valid invoice. Accordingly, we have to make sure that all those vendors who are not issuing e-invoice, I take a declaration from them that e-invoice is not applicable on them. If applicable about tomorrow because of any mistake of them, there is an ITC exposure on you, you reserve the right to recover the money from them. So we have to have that undertaking from the suppliers who are not issuing e-invoice, because the onus is now on you. If they have made the mistake, they have not issued the invoice, till your credit is in dispute. It is not their non-compliance. It's not merely their non-compliance, your credit is also in dispute. Another important part, disposal of fixed assets. Department always scrutinize your fixed assets. What we have seen, people generally, whenever they dispose of fixed assets, they sell fixed assets, they charge tax on the transaction value, they pay GST on the value, transaction value. Friends, please note, Section 18(6) is applicable in case of supply of capital goods or plant and machinery on which ITC has been taken. In that situation, higher of the following has to be paid. First is the tax on the transaction value, or ITC taken on the said capital goods or plant and machinery reduced by 5% for every quarter. So we have to, for all the capital goods which I have sold during the financial year, I have to make a calculation whether my tax liability on account of Section 18(6) formula, whether it is higher on account of ITC taken as per 5% formula, or my tax on the transaction value is higher. Whichever is the higher, I have to pay tax on that value. So this is something which we have to work out. Next is my documents in transit, my goods in transit, etc. The law is clear. Credit is available if you have received the goods or services. So there may be a situation vendor has dispatched the goods on 25th of March. You received the same on 4th of April. In your books of account, you will record as transit, goods in transit, but the credit has to be claimed in the month of April because you have received the goods on 4th of April and not in the month of March. So I have to specifically take care of this goods in transit thing at the year closing. Moving to the last point is the compliances for the ISD part also. So I have to see for the entire financial year whether the ISD provisions have been correctly followed or not. Some important areas to be covered. First, whether ineligible ITC has been separately distributed or not. It's not only the eligible ITC which you have to distribute, even the ineligible ITC you have to distribute. Second is the ratio of distribution. Please note that if your branches were operational for the entire financial year 22-23, then the ratio of distribution is on the based on the turnover of the last financial year. However, if you have newly opened financial branches, in that case, your turnover ratio changes. It is based on the turnover of the last quarter. So accordingly, please revisit your distribution strategy, your distribution formula. If there is any gap, the same can be amended in the month of March. Similarly, if any excess ITC has been distributed, credit note can be accordingly issued. So we have to have compliance of the entire ITC provision in the March month just to make sure my ITC compliance is proper. With this, I will be ending my presentation. Thank you.
Thank you, sir. Thank you very much, sir. Moving ahead, we are going to next announce to Shibam Mehta sir. Presentation GST compliance pertaining to cross charge. Before calling him, I have to say a few words about him. Mr. Mehta is a partner of Lakshmi Kumar and Sridharan. He has been practicing as a tax lawyer for more than 12 years with Lakshmi Kumar and Sridharan. His area of practice covers service tax, central excise, sales tax, GST, etc. Mr. Mehta is a chartered accountant and lawyer by profession. Yes, sir.
Good afternoon, everyone. My screen is visible. Are you
Yes,
able
sir.
to
Yes,
see
sir.
the PPT?
Yes. Clear, sir.
So thank you, Nandaji.
Thank you,
Thank
sir.
you, PhD, for inviting me for the session. Like Nandaji explained, so my topic today is on, as we are talking about GST compliances being financial year end, I'm going to touch upon a very tricky issue. Why I say tricky? Because this is something which has been introduced first time in the GST, what we call as a cross charge. as a concept, if I look at the pre-GST laws, excise, service tax, customs, this cross-charge as a concept was first time introduced in GST. And now after 5 years, we are talking about the 6th year of GST compliances. Still, there is a lack of clarity on what is understood as a cross-charge. And still, there are a lot of disputes in investigations, audit, even a show cause notices has been issued on this point. So while we are talking about closing our 2022-23, there are certain areas which we have to very clear about, which is on the compliances aspects of cross-charge. Before I really touch upon what I'm going to talk about is concept of cross-charge. What is the time of supply when it comes to cross-charge? How I need to value these supplies? What are the specific issues which are coming up? As I said, there are a lot of investigation issues which are coming on for this cross-charge as a concept. And of course, last but not the least, the compliances which have to be done. Just to clarify everybody, there is nothing, if you are looking at the GST law and trying to find out the term cross-charge, it's not as a definition or a word which is appearing in the GST law. It is nowhere, you will not find a word called as a cross-charge. It's a terminology, or I will say it's a word which has been invented because of the meaning which is there. When you understand as a cross-charge is basically when you are deemed to have been providing a service to your own branches or your own GSTNs, or also when it is said that you are going to provide a service to your own subsidiary company, or when it comes to import of service, even without a consideration, they are deeming that there is a service which has been imported by the foreign entity to the subsidiary entity, even if no currency is earned. As a concept, it was introduced to ensure the free flow of credits. Clearly, to ensure that if there is a credit accumulation in the head office because of the various services received by the head office, the logic seemed to have been that I should be able to cross-charge to my locations, and the different locations can take the ITC or whatever taxes I'm going to cross-charge. But nevertheless, that was the objective. But what we have seen in last 5 years, it has gone much beyond the objective. Rather, it has become more of a dispute-prone area than the real beneficial purpose for which it was introduced in the GST law. Just to tell you broadly, as Tushar was also talking about ISD, cross-charge, etc. Even without a consideration, it is deemed as a supply. So whether you have actually received the supply or not is immaterial, or you have actually paid the money or not is immaterial. It will be deemed that the head office has provided the service to the branches, and so in some cases it may also be deemed as the branches are providing a service to the head office, irrespective of there is no payment flow which is happening. This is how it has been deemed. And it is not only about, as I was mentioning, if you read the entry which is there in Schedule 1, it is not only covering the distinct persons, that is different GSTN of the same legal entity, it is also talking about related persons. So when I'm looking at holding subsidiary or an entity wherein I have more than 25% of the shareholding, those will also be covered under this scope. So the scope is very wide of the Schedule 1 entry. It will apply to within the same legal entity, or also to the entities for which I have some type of relationship involved. So first of all, I think it is very clear now. So many advanced rulings have come. Even department is of the view, when I see some of the notices which have been issued, that cross-charge as well as ISD, they are two different concepts. And what department is insisting, even in the in this advanced ruling appellate order in Cummins, what has been highlighted is that you do not have a choice of going for only ISD or for only cross-charge. You have to necessarily apply both the concepts when I talk about ISD as well as a cross-charge. So if you have a head office, and just to give you broadly what is the difference between ISD and a cross-charge, if a third-party service provider is providing a service to your head office, or the invoices to your head office, but the services are actually attributable to one or more registrations, head office is only acting as a recipient of invoices, not the service, then you have to apply the ISD as a concept. Where the services are actually consumed at the head office, and you're using those services to further provide support to your branches, that will be considered as a concept of cross charge. So there is clearly a distinction. The mechanism has been different, concept is different, even the GST compliances to be followed in context of ISD versus cross charge is different when it comes to actual distribution, and in the year end when it comes to actualization of the credit when I talk about ISD. So you have to be very clear on these two concepts. If for last 4 or 5 years we have been following only one of them, it is a right time before a show cause is issued, a department comes and insists on denial of credits, etc., that we try to regularize our books. I understand I'm talking about regularizing the books for last 5 years, which may have its own tax implication, including interest, etc. I'm not going into too much of details. Yes, there is a need to correct it. There are ways and means which we can look into how to actually correct future and regularize my past also. Just to give you a broad example, if you look at gamut of services which are received by you, if you're talking about statutory audit of the business as a whole, you need not have a ISD to distribute it. You can definitely cross charge it. But if you look at the stock audit done at a factory level and only the invoices are received at the head office, that is something which has to be distributed through ISD only. Similarly, if you have some CHSS services which are used in one of the factories and only the invoices are issued by the CHA at a head office, to call it as a cross charge and taking the credit at the head office and passing it on may not be possible. So there are certain services wherein you necessarily have to follow ISD. Rest, most of them can be said to be, let's say, a legal service on retainer basis. You are the lawyer is raising an invoice on your head office, and your tax team is sitting at the head office. You can still say that in respect of those services, head office is consuming the services of the lawyer and using those specialized services to further provide legal support to rest of the branches and do a cross charge for that. But for all the services to say I will either do ISD or I will either do cross charge is not possible. You have to follow both the concepts together. So that's very, very clear. We can take up the questions if you had after the end of the session. Now coming to time of supply, this is why I'm touching upon is, as you know, when I talk about cross charge, there is no consideration which is being considered or deemed by the law to be there to call it as a supply or service. Now, can I say that when a head office is providing a service to the branches, it is a continuous supply or service, or it is a single supply or service? Because you all know that if it is a continuous supply or service, the time of supply gets triggered as per the specific provisions of the law. If it is not, then it will be considered as a one-time supply. Then you have to find out when the invoice has to be raised. So if you look at the continuous supply of service as a concept, one, it should be continuously provided. So when I'm talking about providing a support service from head office to branches, I think the first condition that it is a continuous supply or a recurrent basis supply is definitely gets satisfied, because if it is a deeming fiction that your head office people are regularly providing support to your branches, it's a continuous supply. We cannot say it's just one-time cases. It cannot say it's not happening on a recurrent basis. The real challenge can be how do I satisfy the condition that there is a periodic payment obligation involved? Because to call it as a continuous supply or service, there should be a payment obligation as well as one of the conditions. Now, what my understanding is that when I look at Schedule 1 supplies, the law in various places deems that the payment is done. When I say various places, if you look at 180 days clause provision, which is section 16 and rule 37, they have rule 37 specifically carve out Schedule 1 scenario for 180 days payment, which means they deem that the moment the service is provided, the payment is done. So periodic payment obligations is deemed by the law to be otherwise satisfied, or to put it differently, the definition clause starts with unless the context otherwise require. So when I talk about cross charge, time of supply as continuous supply of service, my understanding is this periodic payment obligation condition should not apply, because as a law itself, it is deemed that there will be no payment, there will be no consideration when I talk about supply. When I talk about availment of credit, it is also deemed that the payment is already done, and therefore 180 days condition do not apply. So you can safely assume that the cross-charge, time of supply, you have to look at continuous supply of service provisions. Now, interestingly, when I look at the time of supply of section 13(2), it is either when the invoice is supposed to be raised as per the provisions of section 31 or date when the payment is made. Again, they are again and again linking with payments. So you can ignore the payment part. You can only focus on when the invoice is to be raised for these supplies is as per the contract. If there is an understanding as per the contract when the invoice is agreed to be paid, to be raised in this scenario. Now, when we are talking about the deeming fiction, definitely there may not be any written understanding between a head office and the branches. So what we can have it as a terms of GST compliance when you're talking about kind of an internal memo, which says that for these services, the invoices will be raised either quarterly, half yearly, and even yearly if you are able to justify it for some reasons that why these terms are being introduced in the internal memo, then the cross-charge invoice can be raised once or twice in a year, and the compliances can be done to that extent. And we can justify that raising of invoice once as something which is applying to continuous supply of service. So therefore, I feel when I look at the time of supply, if I look at 31(5) section or 13(2), we can ignore the payment part, we can ignore the event part for a moment, and we can safely assume that as per the contract, whenever the date is identified as the date on which the invoice is to be issued, that will be considered as the date when the time of supply gets triggered. Now, I think this I have done. Now, what about ITC availability? Now, suppose, as I said, we are talking about cross-charge and no invoices have been raised for last 4 or 5 years. And now I want to regularize. I have been assuming in an organization I was following only ISD and I wasn't raising any cross-charge invoices. Today, if I decide to raise the invoices for the past periods and try to regularize it, can the ITC be availed for those invoices? Specifically because we are talking about these services provided assuming on the financial year basis. So if I raise 4 or 5 invoices or 3 or 4 invoices together this year and try to regularize my past also, so far as the cross charge is concerned, whether ITC will be available, to my mind, there is no restriction of availment of credit by the branches if the invoices are raised at a later date, as long as the appropriate interest, if at all applicable, on those cases have been paid at the supplier location. So I don't see any problem there. Whether the interest will be applicable will definitely depend upon how you are going to term your time of supply when the invoices are raised. If you say that it should have been raised annually, then definitely, if we are talking about 17, 18, 18, 19, there will be maybe an interest implication. If you can justify more than a year why it is been for the initial year, why the invoices were not raised and why I'm raising it today, we can look into the interest aspect also. But to justify the interest on those cases, it might be very, very difficult. Now, coming to the valuation part of cross charge. So how do I value these services? Now, this is very interesting to look. If I look at the valuation when it comes to related party or intercompany supplies, the law says you can go by the open market value or value of like, kind, and quality. Now, we are talking here of cross charge, which is a supply from head office to branches. And definitely, I'm not into the business of providing these type of support services. Maybe I'm purely a manufacturer or a service provider, which is not of providing a support service. So I may not have an open market value of the like point services which I'm providing. So which means clause 1 and 2 on your screen may not apply. So what are the other bases which I can look into is definitely I can look at the proviso. If the open market value is not available, I can look at the proviso which says that if the full credit is admissible at the recipient location, you can adopt any value, and the value which is declared on the invoice will be deemed to be your open market value. Now, this is interesting actually. I have seen some of the investigations where the clients have raised the cross-charge invoices and the invoices were of merely like 1 lakh, 2 lakh rupees in a year, calling it as and trying to use it. Even I've seen some cases where the cross charges invoices have been raised for 1,200 rupees only, and the tax of approximately 180 rupees or 180 rupees 200 has been discharged. Department is raising a question how you will justify as a value, where in fact the cases are where even the credit is full credit is admissible. They are questioning this. Now, this methodology which is given in the law is to justify the raising of invoices and unnecessary paying the tax where the credit is admissible at the recipient location. But as on date, I've seen a lot of disputes even coming on applicability of proviso. And what department is focusing on is whether at the recipient location, some way or the other, the credit can be denied so that the proviso itself, which is a critical proviso, can be, be done away with. So I've seen these type of cases. So like I think one of the speaker also pointed out, for cross-charge purposes, you should be very, very clear that my recipient is entitled to full ITC. Full ITC doesn't mean that I may be only supplying the exempt supplies. Full ITC also will mean if I'm providing certain services or supplying any goods on which ITC of services is barred, then also availing the benefit of this invoice value as an open market value will not be available. Just to give you one example, if you, at various locations you are providing the canteen service and using 5% rate, and thereby saying that the ITC is not available because 5% is subject to ITC not available, the question can be raised when I'm talking about cross-charging, that why should I adopt your invoice value? Just I'm raising that doubt here. You may think through it, and if not done it till now, definitely have to look at for the past periods as well as for the current financial year how we can regularize it. Now, as we talk about this cross charge, which has become really a difficult way of implementing it, just wanted to highlight certain provisions which are there in the statute books, but for some reasons have never been activated. One of them is Rule 32.7, which is there on the screen. Interestingly, there is the powers which have been given under Section 15 and Rule 32.7 for GST Council to notify certain services for which the value shall be deemed as to be nil. And when they are referring to these services, they are referring to Schedule 1 between distinct persons clearly. But this Rule 32.7 has not been activated since last five and a half years now. We are talking about the 6th year being closing. Maybe it's a right time that if government should really get into, because these type of disputes really do not help anybody. The tax is paid at one location, the credit is available at the other location. For any good reasons, if I have not raised the invoices in the past, if I would have raised the invoices, I would have been entitled to full credit. If today also government want to resolve these issues, they do have a power in the books to notify this provision wherever and call the value to be nil. This will result into closing all sort of investigation, dispute, so-called notices if they do it retrospectively. But I don't see this happening to be in the near future. Just wanted to highlight you that there are provisions to that extent in the law also. Now, when I talk about valuation, there are so many advanced rulings which talks about how do I value the services, particularly where my recipient is not entitled to full credit. If the recipient is not entitled to full credit, I cannot raise a notional invoice and call it as a open market value. I have to necessarily find out the value of these services. Now, in the beginning, as I was pointing out, if I'm not in the business of providing a support services to a third party, I definitely do not have an open market value available with me. I do not have a value of like kind of goods and services available with me. What is the other or third fallout option is, I cannot go to the proviso because full credit is not admissible. The another option which comes to is cost plus method, which has to be adopted. In cost plus method, another area which I think have been discussing for so many years now, whether I have to factor the employee cost or not. If you look at the advanced rulings which have been issued in this aspect, they have clearly said the employee cost has to be factored. The argument that the employee is not the employee of the head office, but of all the branches taken together of the organization as a whole has been rejected in so many advanced ruling. Rather, what they are saying is the Schedule 1 is talking about supply by the head office to the locations. Employee cost is the cost of the head office, therefore it should be factored. Definitely, there are two views possible. Those who have not been factoring employee cost is definitely going to litigate. I feel there are fairly reasonable chances to justify this based on various income tax provisions, etc. But since these provisions are introduced for the first time so far as indirect tax is concerned, not only in India, but also in various international legislation, you may not find much of the support there. Definitely, this has to be litigated through the Indian judiciary only if you want to have a right answer to this. Interestingly, what has happened is because of this problem of factoring or not factoring employee cost, many of the people are not even complying with the cross charge. That's not the solution. I'll give you another kind of cases which are coming up is if at the recipient branches, I'm only doing 1% or 2% of the exempt supplies. Now, proviso is not getting triggered because I do not get full ITC. That's very clear. I mean, the word is full input tax rate. So there is a need for a reversal of 1% at the recipient location. Because of this, if they factor the employee cost, the cash outflow will increase substantially at the head office location. And the credit may be kept lying at the branches location. So in that event, what two options people are adopting is one, they will litigate on the employee cost, saying employee cost should not be factored. Another, which I've seen many companies adopting, I don't know how far it is correct, just to highlight you how the industry is moving. They're saying we will have two different cross-charge invoices, one for the exempt supplies, where the exempt supplies are very, very small, and another support invoice for the rest of the supplies, and thereby adopt notional value for rest of the supplies. For exempt supply, adopt cost plus basis and discharge the tax on it. Now, this is something which is being come as a fairly new concept and has to be tested in the code of law. I do not feel it's to be correct today to say it's a correct approach to be adopted. Third could be ignore the exempt supply if it is very, very minuscule, to say it is below the de minimis rule. Full ITC means broadly more than 99% of the ITCs are admissible. Again, if I go by the strict reading of the rule, this argument may not sail too. But again, these are the arguments which has to be tested so far as cross-charge valuation is concerned. Now, coming to some specific issues which have come to us, particularly for the cross-charge of services between the related entities. When I talk about holding subsidiaries, some specific issues. See, what happens is the holding and the subsidiary entity are otherwise working independently. But sometimes holding company asks them, particularly when I'm talking about holding outside India, subsidiary in India, many times holding company asks them to make the accounting books in accordance with the law which is applicable in that country, to make certain reports or certain budgets in accordance with the formats which are there at the group level. And thereby they are providing some inputs to the subsidiary company to review their performances. Now, can this be called as an import of service when I talk about foreign and holding an Indian subsidiary? Similar can be the cases wherein Indian holding company is providing long-term strategic supports to the subsidiary company, mainly because they have the they are the major shareholders of the subsidiary. Now, if you really ask me whether you have any jurisprudence to justify that, there are a couple of them. In fact, in the context of UK VAT, there has been a ruling which says when the holding company do a kind of a long-term strategy for the group itself and provide the inputs of those long-term strategies to the subsidiary companies, those inputs cannot be said to be a real-term service provided by them. They are doing it because that is for their own investment purposes. They need to have those strategies placed in their subsidiary company. Similarly, if you look at in the OECD transfer pricing principles, there also what they have said is if a holding company or the shareholder, because of his ownership interest in one or more of the group companies, is asking them to maintain the records in a particular manner. In fact, they have also given certain types of examples, like if they are asking them to do a financial reporting or the audit in a particular manner, consolidate the reports in a particular manner, cost relating to pay audit of the subsidiaries done at the behest of holding company. These type of things cannot be said to be actually a service provided by the shareholder to their own entity or the holding company by their own entity. They are all examples of the shareholding function which a holding company is doing it. Now, this is very interesting. This was in the context of transfer pricing. They have to test these arguments when it comes to intercompany cross charges to say that I'm actually not providing any support service. These are something which I will never like to ask somebody else to do it for me. If I am a subsidiary company, these are the important test is it's not they are providing a service to me, rather I've been made to do certain tasks because my shareholder wants it to be done or my parent company wants it to be done for a particular manner. So these are certain cases or certain principles which need to be tested when it comes to cross charge. I thought it is important to highlight. Particularly, I'll give you one more real-time example. Today, I've seen many companies, when it comes to the question of corporate guarantee given by the holding company for the subsidiary company, they are falling a prey to this dispute in a sense that when the holding company has given a corporate guarantee for a loan to be provided to the subsidiary company, and particularly when the subsidiary company is also doing some exempt activity, what this when the dispute is raised that this corporate guarantee which you have provided is a service given by you by the holding company to the service subsidiary company, therefore a cross charge invoice should have been raised which you have not raised. Therefore, you today I'm asking you to raise the invoice. You raise the invoice of some percentage of the total loan amount and discharge GST. I've seen many of these companies simply paying these tax amounts and closing the matter to avoid any interest and the penalty later on. I understand this is a disputable area. I don't mind paying taxes under protest if at all you have to. But closing the dispute and not looking at the other side of it, therefore I thought I will highlight it. Again, one should think, can I justify it as a shareholding function? That because holding company is my shareholder, he necessarily have to provide some financial support also to the subsidiary company, and therefore it is not a support provided by the holding company to the subsidiary company. Now, this aspect is something which I thought I will raise at this forum and leave it there, because this has to be tested in the court of law. Why I'm saying is, prior to GST, even some disputes were raised about the corporate guarantee. In fact, there is a reported judgment of DLF also, of tribunal. What saved people from service tax demands insofar as providing bank guarantee was that there was, under service tax, all of us know, was a requirement to have a consideration clause. Now, today, I do not have a consideration clause, rather I have a deeming fiction under Schedule 1. So these judgments really do not help me. So what we can think of is, we need some out-of-the-box thinking to justify this corporate guarantee provision. If I can say, I'm again giving you an example of OECD transfer pricing principle, which says, if these are all examples of where the parent company or the investor is providing some type of support as a shareholder to the subsidiary, and these are considered as not to be the service, where they say cost of raising the fund for the acquisition of its participation, cost relating to parent company, investor relation, etc., is not a service by the holding to the subsidiary. Rather, it is for a shareholder to protect his own interest. He is arranging the funds. If I can extend this example to corporate guarantee, it will be interesting to see how the courts will react to that. But just wanted to highlight, these are the disputes so far as the cross charge is concerned. Now, another, I think this is a typical dispute on the brand logo, wherein one company is having a logo or a brand and the other subsidiary company is using those brands without knowing that they are also receiving a service from their holding company. Here, to justify it by way of saying that this is again a shareholding function might be difficult, but If I have otherwise I have been raising a support service invoice which includes all gamut of services provided by the holding company to the subsidiary company and so on and so forth. I think this can also be justified. Now, what this issue gives us a hint is when we are going to have a documentation as to what all kind of supports I am providing, I should leave it very, very wide to cover all type of supports which are given by a holding company or a related party company to the other company. If you are having an internal memo for cross charging, it has to be carefully drafted. If need be, has to be vetted by the consultants to ensure that any kind of demand tomorrow for a support service by head office to the branches or related companies is justified by the memos. And that makes the need of GST compliances of cross charge very, very relevant, that if we do not have such documentation today, we should definitely have an internal memo. We cannot simply rely on the oral understanding. It is definitely important to document it, and those documentation should be properly worded to cover all type of problems which may occur in future. Now, as I come to the closing part of it, definitely, as I said, there should be some minutes of meeting, some board resolution, some internal communication, some agreements when I talk about two different entities to be in place. If we are changing the valuation mechanism, so for few years I was adopting, let's say, cost plus, or I was not factoring salary of the employees. Now I started factoring salaries of the employees while I'm going to cross charge. There should be definitely a proper documentation and justification for that. So that's something which we have to be careful about. Now, before I conclude my session, one important point. Many clients are asking, or rather I've seen even doing it in the past, that if they have a credit accumulation in one branch, they are using this clause to liquidate the credit and issue a support service invoice from one branch to another branch or to the head office or to any other location where the payment is made in taxes or in cash. Tax is paid in cash. Trust me, this is not a mechanism developed to liquidate your accumulated credits. Unless you are able to justify that this is a support service, the branch can provide that support service. This is a two-edged sword. At somewhere or the other, the department will say you have raised the invoice without providing any service. Rather, you were not capable of providing any service from those locations. Therefore, not only they will deny the credit, they can raise the dispute of interest, penalty, and so on and so forth. So you have to be very careful. This is not a mechanism to liquidate the accumulated tax credit. I'm pointing it out very, very clearly. Last, I think when we're talking about March year end, if you have not raised the invoice, it's better to have it a proper documented invoice for the cross charge to be raised in the month of March. Do a proper appropriate disclosure in 1 and 3B. And I think in 9 also it will automatically get auto-populated, but 9C, those who are CS here can understand what I'm saying and can take help of their chartered accountants while they're preparing the 9C, that there will be a gap in their accounting book because there will be no payments which will be done. So they have to reconcile the 9 and 9C. With this, I'll end up this session. I'll be happy to answer any questions which you will be having on this topic at the end of the session. Thank you so much. Thank you, everyone.
Thank you, sir. Thank you very much. Now, request to Sri Pawan Arora ji present his presentation on GST compliances pertaining to litigation activities. So, before calling him, I have to like to few words about him. Pawan ji is a chartered accountant and law graduate by profession, associate with Athena Law Associates since 2010, and currently head of the GST advisory services of the firm. Pawan ji.
Thank you, Nanda ji. Thank you for the introduction. And I would like to thank PSD, Chamber of Commerce, for inviting me for the session. So friends, all my learned friends have discussed about the compliances which we are required to take care at year end for the financial year 22-23. So why we are all discussing about it? Because definitely it have an impact on longer run when our GST returns will be scrutinized by the department, and that would definitely attract the litigation. So now coming to my topic, which is on the GST, how we can take care about the foregoing litigation, which we can take care till today, on today as well. So one of the aspect, as we all know, that matching of GSTR 2A with ITC availed in GSTR 3B is an issue which was going on from last many years, and department has issued many notices on it. But certainly after the circular which the department has issued for financial year 17-18 and 18-19, that matching of credit was not required during these 2 years, and therefore the credit can be availed. However, the circular went away from the requirement, statutory requirement again, and it said that you require to obtain a certificate from the suppliers or the supplier's chartered accountant based on the value of the input credit of that particular supplier. So friends, we are discussing the compliances which we can take care for the financial year. So there is two aspects of it. One is that if we want to simply comply with the law and want to avoid any sort of litigation, and if our issue is not still raised by the department on GSTR 2A versus GSTR 3B, what we can do, we can check the unreconciled credit not only for 17-18 and 18-19, but for all past 5 years. Because that's a different point of discussion, that how this GSTR 2A and 3B matching was required statutorily, from which date. So what we can do, we can check the unreconciled credit of last 5 years. We can go, we can identify the suppliers, and we can attempt to take a certificate from those suppliers certifying that yes, they have supplied the services to us and they have paid the tax to the government. The reason behind is that section 16(2)(c), which is still under litigation before various courts, that if the supplier do not pay the tax, the buyer cannot take the credit, is still under dispute. And the future of this clause will definitely depend on the final outcomes of the writs which are pending before the high courts on this aspect. But to comply with, what we can do, we can obtain the certificate from the supplier. On the other side, if we talk about that how we can proceed in such type of litigation is, see, this matching of credit was certainly not required up to 1st January 2022 under the GST law. Secondly, the circular although clarify that for the 17-18 and 18-19 matching is not required, but they have specified an additional condition. So we can certainly fight on that condition, that this requirement is not the condition for availing the credit under the law, and therefore it cannot be supposed from us after the 5 years of the purchasing from those suppliers. Secondly, that supplier has paid the tax to the government is certainly cannot be verified by the buyer from the available return 2A at that point of time. So we can argue definitely this matter, but if we are discussing about that how we can take care of the future litigation as of date, so we can certainly go for obtaining the certificates from the suppliers so that we can avoid any unnecessary litigations on this aspect. Now coming from the issue of GSTR 2A versus GSTR 3B, now department has evolved a new aspect of litigating the credit of the recipient. As we all know that section 16(2)(c), as I discussed, provides that if the supplier has not paid the tax, buyer is not eligible for the credit. Now what the department has started to do, department has started to check your GSTR 2A, which is always a dynamic and provide the up-to-date data from last 5 years. Now the 2A has started to capture even for 17-18 and 18-19 that how many of your supplier has not filed a GSTR 3B return. Now what the department is doing, they are scrutinizing your GSTR 2A and checking that if the supplier has not filed a GST or 3B, then they are proposing to deny the credit at first stage by issuing the ASMT 10, and definitely post submission, they will definitely going to reject it on the ground that since your supplier has not filed the GST or 3B, we are presume it's equivalent that they have not paid the tax to the government, and therefore we are not going to allow you the credit. So friends, if you face such type of issue, so what we can do at this moment, not only for this 22-23, but for past 5 years, certainly I will again discuss 2 aspects of it, that what we can do to avoid any unnecessary litigation and what are the grounds available to us for fighting this matter. So first I will discuss what compliance we can take care of at this moment. Is that now our all focus has gone to GSTR 2B, because now the base of availing the credit is become GSTR 2B, and we forget about the GSTR 2A. But the GSTR 3B filing status is available on the GSTR 2A and not in 2B. So the filing status of GSTR 3B is available in GSTR 2A. What we can do? Certainly, there are organizations which there are many few cases where the GSTR 3B have not been filed by the supplier. So what we can do? From last 5 years, we can check that how many vendors have not filed their GSTR 3B of last of the respective periods. We can do follow up if possible for us, and if they have they may submit us that they have filed the returns but not reflecting in properly reflecting in our 2A, or we may obtain a certificate that they have paid a tax to the government through DRC 03 challan on the supplies made to us and get it certified through their chartered accountant. So this is the way to avoid any future litigation. But on what ground we can argue this aspect of new emerging issue which is coming out among the field formation? First of all, friends, that to check whether my supplier has filed the GSTR 3B or not would made available to me only after October 2020. So prior to October 2020, I would not be in a position even to check whether my supplier has filed GSTR 3B or not. And with that, we can also argue that there is no mechanism available to me whether my supplier is paying tax to the government or not. So this is the argument which we can take. Secondly, as my learned friends are discussing, that focus has government made totally on GSTR 2B. So 2B is not giving me any data about the filing, whereas 2A is giving me the data about the filing status. And this third argument which we can take of the recent amendment, that from October 2022, the government has made effective section 38 and government has made effective section 16(2)(ab), which says that credit will be restricted as per the statement provided under section 38. And section 38 provides that a auto-generated statement will provide you 2 types of things, that what credit is available to you, and on the following grounds, which are the 6 parameters as discussed by Bimal sir, that on 6 parameters they will provide you that ITC is not available to you. Now the point is, when this statement auto-generated as specified under Rule 61 is the GSTR 2B only. So now this GSTR 2B is telling me that ITC is available to me, and GSTR 2A is providing me that GSTR 3B is not filed by the supplier. So there is a contrary statements provided by the portal to me itself. Now I have to rely on GSTR 2B based on section 16(2)(ab) read with rule section 38 read with rule 61, that whatever credit is made available to me through GSTR 2B is eligible to me. And this GSTR 2B credit is now also getting auto populated in my 3B. So I can easily take an argument that the portal itself through GSTR 2B and 3B making me available the credit. Now you cannot deny this credit based on another argument that supplier has not filed his GSTR 3B. So this is very interesting issue going on, and definitely we can fight. But on the other side, if you want to comply it with, we can definitely check GSTR 3B filing status in our GSTR 2A and can take care of the and follow up with the suppliers to avoid any unnecessary litigation in the future. Now, friends, you must have heard about artificial intelligence, which the tax department is using to identify the tax evasion of the assessees. So as my friend Tushar has discussed about Rule 42 reversal, that we must take care of the Rule 42 reversal or Rule 43 reversal at the year end. Even after 5 years of GST and we are in the 6th year of GST, people are ignoring the Rule 42-43 reversal. And what is happening is that the artificial intelligence is applying very simple fundamental that if you have filled exempt services in your GSTN 9, but there is no reversal under Rule 42 column in your GSTN 9, then artificial intelligence is giving the data to the either audit department or the anti-evasion department or the DGGI, depending on the gravity of the issue involved in that. So they are throwing the information to these three authorities, and these three authorities has initiated the investigation in many cases only and only on the ground that you have not reversed the Rule 42 credit. Although it is very simple case that they may simply ask from the SSE that whether Rule 42 reversal is made, not made, and on what ground. But as all of us know, that if issues start only with the ground that we have not made the reversal under Rule 42, but the investigation ends up in many issues and many pressure and many nuisance from both sides, that it result into many other aspects of the our compliances. So to avoid any unnecessary, please take care of this. Rule 42 is very important, that you must have reversed the credit under Rule 42. Otherwise, you will land up in the situation that your investigation is only initiated on because of this ground Rule 42 only. Now, as my learned friend Tushar has also discussed about the reversal of credit on non-payment to vendor within 180 days. Yes, of course, we must comply with at the end of the year. But what litigations are going on this? First of all, what is happening that the taxpayers are facing issue in providing this data. How so? Because we have a habit to maintain the ITC register based on the data of the supplies made by the supplier, but we do not capture the invoice payment date in that register. Now, what the authorities are asking from the recipient, and sometimes they give only 5 days, 10 days to submit the data. They're asking that we have to put payment date in the ITC register. So certainly we can ask them to relax this requirement, because we can show otherwise also to demonstrate them that there is no delayed payment in this case. But definitely going forward, and especially for 22 and onwards, and if possible, we can also maintain for last 4-5 years also, that we start to capture payment date also in our accounting softwares of the corresponding invoice, and therefore that should be captured in our input register to avoid any unnecessary litigation. Tushar has also discussed about Rule 37. So friends, for the past litigation, now this amendment in Rule 37 has given me a chance to argue this matter, that prior to this rule amendment in Rule 37, which prescribed me the method of reversal of credit through GST or 3B on non-payment to vendor. Earlier, they said that you have to report it in GSTR 2 and 3B, or sorry, GSTR 2, which is not an available mechanism to me. So there was no proper mechanism available with me for reversal of credit prior to the amendment in Rule 37, and we can certainly fight on this aspect. Secondly, as I always recommend, if we want to litigate on this aspect, that I have a constitutional right under Article 19G to have a terms with my suppliers and buyers. If my suppliers contractually allowing me to pay within 9 months, then how a GST can interfere into that I have compulsory required to pay within 6 months. And if you go with an intent of introducing this clause of 180 days, the government says that council said we want to support MSME sector and we want to curb this fake invoicing. Therefore, we are introducing this. But at this stage, this provision is blindly applied on everyone, irrespective of the fact that other side itself has allowed me the period more than 6 months for paying the consideration or for many reasons. So therefore, this point can also be litigated. But yes, of course, I have to take care of this 180 days aspect at the year end. And as I said, please start to capture payment date in your accounting software as well as for the past in your ITC register, so that in future, whenever government asks you, whenever the department asks you to submit the data, you would be able to in a position to submit this data. Now, one aspect which is introduced in this financial year 2023 is that we cannot reduce the ITC auto-populated in GST 3B, which is coming from 2B. So the government has introduced that your credit will be auto-populated. You cannot reduce it in the auto-populated, but you can reduce in the subsequent columns, temporary reversal or the permanent reversal. So one of the issue which is also highlighted by Tushar during his ITC deliberation, that there is a gap between the accounting treatment and the ITC auto population, that we are not captured the invoices in the accounting system, but those invoices have been coming in GST at 2B and the credit is auto populated in 3B. So because of the different practices of the maintaining ITC register, the industries are facing challenges to implement it. But I am of the view that there is now no other option to follow this mechanism of GST 3B auto-populated. So please adopt and basically coordinate with your existing system to the new system. And from this, at least April 2020-23 onwards, start to comply with this auto-populated aspect, that you must take the credit auto-populated and temporarily reduce the credit which you have not accounted for. And you can take in subsequent period by adding in the auto-populated credit, but please start to comply with this aspect of GST 3B auto-populated credit. Friends, now we have also discussed during our deliberations of today that RCM liability needs to be checked at year end, whether we are duly comply with the RCM liabilities or not. I have recently encountered with an issue that one person from last 5 years was not paying a tax under RCM for the services received from some local authority. To me, it is very strange that how you can say that I was not aware, when simply what we can do, it's very easy at certain point of time. Some things are very easy to identify, that if the supplier has not charged the tax on its invoice, or the supplier is not registered and even not issuing the invoices to you, then you can certainly verify from your tax consultants or the professionals that or the supplier itself, that why you are not charging tax to me, whether it is exempted. If they come across that this service is not exempted, then they will definitely come across that they are supposed to pay tax under RCM. So you must ensure, it's a very easy exercise, that on whatever invoices you have not been charged tax, you check whether the supplier is unregistered or those supplies are coming under RCM or not. So we must apply this very easy technique to avoid any unnecessary litigation. Now, in these cases, one aspect which I can discuss, that if you encounter with the situation that you have not paid the tax under RCM, now what the investigation authorities are doing, that they are forcing to pay tax under section 74, because they want the penalty of 15% from you also. Now, my humble submission is that, as we are discussing, that the credit of RCM is can be availed if that the case is of unregistered supplier, and we have to suppose we are required to raise the self-invoicing. Now, if we pay the tax under section 74, our eligibility get exhausted because of section 17(5)(h). So therefore, what we should do, we should argue this, at least if we are paying it, then we should paid it under section 73 and not the section 74, so that our eligibility of credit shall not get exhausted because of the payment under section 74. as Simran has discussed, that we should take care of the invoices under RCM on the services received from the unregistered suppliers. There is a statutory requirement, as discussed by Simran, that we are supposed to raise an invoice in case of supplies received from unregistered supplier. And friends, I have seen the show cause notices to deny the credit, because the credit of RCM is eligible based on the invoices raised by the recipient itself under section 31(3)(f), which is a self-invoicing for the services received from the unregistered supplier. So if you are not receiving invoices, the valid document under Rule 36 is the self-invoice. So the department is denying the credit on this aspect. Definitely, I'm able to succeed in 2-3 matters on the procedural lapse and correction of that procedural compliance at later stage. But definitely, it would result into undue litigation, and we can take care of the same. Now, coming to this one very important aspect, as we are knowing that this Safari retreat, the judgment of Honorable Odisha High Court is pending before the Honorable Supreme Court, and its outcome, its final outcome, is differing from last 3 months. Now, what is the issue in that case is that if the construction is done for our own, the facts of that case is pertaining to the construction of a building for further leasing. But that could be other situations also, that if a professional, if a chartered accountant, if a company secretary is getting construction of his office for providing the chartered accountancy services, or there may be different aspect. We are getting manufactured our factory for production of the goods. So section 17(5) C and D denies the credit to me. But Safari retreats dealing with the aspect that they have constructed the building for further leasing. They have allowed the credit. Now, since Supreme Court judgment is pending on this aspect, what at least if you have not availed the credit in past years, I have always recommend to reserve your credit. But if at least you have not availed in the past year, but for 2023 onwards, and you have a good chance to avail this credit, keep it with you till the final outcome of the Supreme Court. And definitely there will be a fair chances that after the Supreme Court judgment, if that principle emerges that credit should be allowed on this construction service as well, then you would be benefited with a huge credit. So you can avail those credits which you have spent on the construction services of immovable property. Then you can take the credit. And definitely today also, what the people are doing, I have seen, they're ignoring the plant and machinery part. They are giving the contract for movable as well as immovable combinedly with a single consideration. They should take care that credit of plant and machinery and movable is still allowed without any doubt under section 17(5) C and D. There is no coverage of the movable and plant and machinery. So you can avail the credit today also. So please try and to do the planning, or basically do the proper due diligence on this aspect of construction of immovable property, where plant and machinery is also involved, where movable furnitures are also involved. Please take care of that respect and take the credit appropriately to basically. Now the next question is, as discussed by my learned friend Shivam, that ISD people are still taking the full credit at head offices, and as highlighted by Shivam, that the issue is still going on, and you will definitely land up in the problem if you do not follow the ISD or the cross-charge mechanism. So the issue has already been discussed in detail by Shivam, so I will not touch upon that issue. Now coming to the outwards.
Sorry, Pavanji, we are going to time count, please.
5 minutes, sir. 5 minutes.
Okay, sir. Okay.
5 minutes. Okay. Now coming to the outward supply issue, that we should take care of the certain factors which I will discuss point wise. That post-sale discount, in outward supply, post-sale discount adjustment is allowed only if we have a agreement. So please take care. I have seen you have an arrangement of post-sale discount, but that is not captured in writing anywhere, either in the agreement or certain documents which you have thrown through your advertisements or promotion pamphlet. So you should take care of that. Your post-sale discount is captured in writing. Secondly, people are issuing the credit note even after the lapse of the period which is available, that is the November. So you should not issue the credit note. And although there is a mechanism already available with the buyer to avail the refund, but now the proper mechanism has been provided to the recipient to avail the refund where he has not received the services, and the time period to issue the credit note lapses, especially in real estate sector or the insurance sector, as they have given the example. So we can go for the refund rather than taking the risk of issuing the credit note post the available period to us. One last aspect I want to highlight very importantly, that in this year, one important judgment of the Honorable Supreme Court has come on the secondment of employees. So this secondment of employees is not a basically the judgment has been given on the facts of a certain particular facts of a case. Now what we can do, we can analyze our scenario also, and if we feel with the help of the professional advice that tax is payable, then we should comply with those law, because people are getting notices on the secondment of employees, the tax liability based on the Supreme Court judgment. But if you are getting the notices or if you have a secondment arrangement, then equally we should not pay the tax blindly on this based on the Supreme Court judge, because we can analyze our particular facts, because the Honorable Supreme Court very clearly said that we are giving the judgment based on the facts of a particular case. So with that, I would like to finish my deliberation, and over to you, Nandaji. Thank you. Thanks a lot.
Thank you, sir. Thank you very much. Now I request to Archana Jain, madam, to present our presentation GST compliances pertaining to other activities GST. I want to introduce Mr. Archana, the founder of Archana Jain and Company. She is a chartered accountant and having 13-year experience in cross-functional experience in accounts, finance, and Indian tax. Please, Archana, ma'am. Hello. Archana, madam, please. She's coming due to some technical glitch. She's joining shortly within a few seconds.
In the meanwhile, CA Archana Jain joined today. What we can do, we can take up question answers. Now she has joined, so let her finish the presentation.
Please,
And
Archana,
then
ma'am.
we will take up the question answers.
Yes,
Yes,
sir.
please. Yes, please.
Good afternoon, sir. I'm so sorry. My sincere apologies for the technical glitch that has happened.
No issue.
And I think being an indirect tax consultant, technical glitch has become a part and parcel of my life now. So good evening to all. Thank you, PhD Chambers, the organizers, respected seniors, and my fellow professionals. It is indeed an honor for me to be present over here and to attend and to listen to the eminent speakers that has just spoken or deliberated so nicely on the important topics of GST. And thank you so much to the august audience who is glued to the screen for past 2 hours. So that means everybody is still very, very inquisitive about the GST law itself. So everything has been covered from the session. Then it started from the curtain raiser, I should say, by Bimal Jain sir, Ms. Simran Arora, Tushar Agarwal, Shivam Mehta sir, and Pavan Arora. So everything has been covered. I'll just try to sum up that yes, these are the various important activities as everybody has updated you. That has to be taken care or that has to be taken into consideration because this financial year is going to end and only just a couple of days are left out. So yes, we all have heard a lot about the availment of correct input tax credit, and which is the very, very important. Though the inception of GST was for the seamless flow of credit, but now on a lighter note, I used to say that it has become seamless ITC. So yes, there has been some relief that has been granted by issuing certain circulars with respect to 2017-18 and 18-19, but still we have to be very, very cautious when it comes to input tax credit because the levies are very high. In case if it is found later on also that there has been wrong availment and utilization, then it may come with a package of interest plus penalty. So we have to take care of this. We have to be regularly updating our suppliers, whether they had been reporting the transactions or not. They are regularly filing their returns or not. I know this is a mammoth task. And for a vendors or large vendors, it may not be very, very easy or very, very feasible thing also. But yes, the things has to be mapped because the law has to be read in its complete, I should say, as a whole law itself. And there is no exclusion given for a small taxpayer or a large taxpayer. Identifying ineligible credit. And now it has become very, very more important. Why? Because now they have come up with the new regulations that how you have to report each and everything in your GSTR 3B return. Every tab has its meaning and every tab has been given a value. So now we should be able to highlight what is our ineligible input tax credit with respect to section 17 and how you are taking it, whether you are availing it, then you're reversing it. So every procedure has to be taken care in its full compliance so that there is no non-compliance. Because if you see the word suppression, that has been worded in a really, really, what should I say, in a greater sense that everything has to be taken care of. Otherwise, I don't know what all can be covered under suppression. Review of any payments to the supplier. Again, 180 days time limit is there. Now there is a new clarification that even if a part payment has been made, so accordingly you have to take into consideration whether whole amount of ITC has to be reversed or the amount on which you have already made a payment, and maybe there is some dispute or maybe there is some other reason for the non-payment of the partial amount. So still accordingly you have to take care of your input tax credit. Then cancelled and suspension. Very, very important. And yesterday only when I was attending a hearing, so please take care of one really important aspect, whether the cancellation has been done on the request of taxpayer or it is a suo motu cancellation, because both the thing has a complete different implication. So in case you see that there are some a quantum is high on some of your suppliers who are not regularly filing the returns, or there is some kind of cancellation. So please take an additional exercise before this year is going to end on those kind of suppliers so that there is no further repercussion on the same. Similarly, you have to review tax paid with respect to reverse charge mechanism transaction, as Pavan has also highlighted. These are the small issues where actually error or omissions do happen. So we have to take care. And there has been latest updation also, like renting of residential property, sponsorship, advocate fees. So these are small issues where there are at times that we have seen that there has been omission or errors. And another important aspect is your factory license and any other kind of your compliance licenses or the mandate fees that you need to pay. So again, you have to understand the grievance, whether it has to be covered under RCM or no. Review of material sent for job work. Yes, again, a very, very important aspect. You have to make sure that the goods are returned back or they are supplied further within the time limit that has been prescribed under the law, so that no further interest or penalty can be invoked against you. Important compliances, LUT. Yes, though we have seen that condonation may have been allowed, but it was a story of past, 37/2017. It was issued in year 2017, and today we are standing on 2023. So please make sure that all your compliance for the export facilities are in place. You are able to file your LUTs on time. In case somebody want to opt for QRMP scheme or the composition scheme, or for that matter, the new provision that has been introduced for the GTA suppliers of 5% forward charge. So there is a deadline. So please make sure that you don't miss the bus. So you have to be very crisp on these deadlines that has been mandated under the GST law. Again, there are certain issues which I'm pretty sure all my learned speakers has already touched upon. I just quickly would like to take you through them again. Time limit for availing ITC pertaining to 2022-23. There is a difference of opinion with respect to the time limit prescribed under section 16, subsection 4, whether that time limit has been prescribed for the recipient or for the supplier. But still, to avoid any other confusion or ambiguity, we have to take care of the time limit that has been provided under the law for the availment of ITC. Though there has been a difference of opinion, many litigations are going on with respect to whether 16.2 should be overruling 16.4, or they both should be read in consistence with each other, because the word take is having its own implication. Similarly, now there has been revision in the time limit also, which has been shifted from 30th September to 30th November. And similar time limit has been prescribed for the issuance of credit note also. So we have to take care of those time limits also. Review the calculation of reversal of ITC under 42 and 43. Tushar has very well explained these provisions. And yes, these are the areas where even Pawan has highlighted that at times the taxpayers do make a mistake. They do forget to take into consideration these aspects on month basis. So yes, it is the time before the year ends, you have to reconsider your whole year's calculations with respect to Rule 42 and Rule 43. Though there has been amendment again in these provisions with respect to your duty scripts. So again, you have to consider those aspects also, and accordingly, you have to calculate your reversal for the current financial year. Reconciliation of your GST, TDS, and TCS reconciliation with respect to e-cash ledger, because at times even you'll see that you may forget certain amount of TDS that may have to be captured in your e-cash ledger. So before all these things are happening and you are finally closing your books of accounts, kindly do reconcile your TDS return, TCS return, whether everything has been reflected in your e-cash ledger or no. Computation of breakup of total expenditure. Bimaljan sir has also touched upon this aspect, because yes, the reporting has to be made and it has been made mandatory also. So again, even in your GSTR 9(9)(c) also, these kind of breakup will be required. And for the easement of finalizing the books of accounts, these kind of breakup will be required. So yes, we should be doing the exercise of making these breakups with respect to your expenditure, whether it is pertaining to your registered person or it is pertaining to your unregistered supplier. Critical issues, as all the learned speakers has touched upon on the areas which are, I usually say, are the favorite topics of the revenue, like your RCM. And yes, there has been new entries in your RCM notification, like your residential property, renting of your residential property. Advocate fees and sponsorship has been there, but still we have seen that many at times these things are missed out. E-invoicing mandate threshold has to be dealt with, because from 1st April 2023, it is also again going to be revised. Advisory on opting for payment of tax under the forward charge, as I have already updated. Certain amendment or rectification that you think are necessary and that may have been missed out. So it is the time for your reconciliation for all of your entries that you have done in your monthly GSTR 1 and 3B, so that there should not be any escape or there should not be any entries that has been left out, and they should be mapping with your books of accounts. Another interesting topic, many corporates must have faced the heat of the same, is ITC on CSR. Yes, they have given a clarification that ITC on the CSR expenses will not be allowed. And even Bimaljan sir has highlighted this issue. It is a prospective amendment. So what about the retrospective aspect of the same? So again, a litigative issue, we have to see the cost analysis and the benefit analysis before you take any conscious call on the same. But yes, as of now, with respect to the clarification, you have to see whether these expenses has been excluded from the bucket of your input tax credit, which is eligible for you for the availment as well as utilization. Schedule 3 transaction to be included in exempt supplies. I fail to understand this amendment that has been brought out with respect to your warehoused goods transaction. But yes, now there is a new clarification with respect to these transactions, that even if there is a transaction which was falling finding its place in Schedule 3, which is for no supply, but still for the sake of reversal, common credit reversal, these kind of transaction, when your goods are in your warehouse and they are not cleared for the home consumption, and before that only they had been sold to some other recipient. So any credit pertaining to these supplies will be falling in the finding its place in the reversal sector, and because these kind of transaction has been included in exempt supplies. A clarification with respect to Section 23 has been given in the latest GST Council meeting, and which has said that in case you are falling in the parameters of Section 23, then there is no such requirement of registration. So again, before the new year is coming, the new financial year is coming, it's time for you to take a conscious call in case some of your client has been registered because of the ambiguity between Section 23 and Section 24. So now you have a relief on the same. Amendment in Schedule 3 is again a big relief, where they have given a clarification that all the 3 entries, high sea sale, merchant trading, has been incorporated, and they has been incorporated from a retrospective effect, and that is 1st of July 2017. So that means when the audit is being conducted and there is an ambiguity with respect to the time period from 1st of July 2017 up to 1st of February 2019, whether these transactions of high sea sale, merchant trading, etc., were considered to be a taxable supplies or they have to be considered as an exempt supply. So yes, now the clarification has been given that these supplies are exempt supplies, and the amendment has to be read as retrospective amendment with effect from 1st of July. So any demand which is going on and which has not been finalized can be litigated or can be taken up in this manner also. So apart from these liquidated damages, again, an important aspect, again, on the amendment on which has been given by the department in middle of the financial year. So yes, you can take into consideration all those kind of transaction that has been illustrated in Circular 178/10/2022, which was issued in the month of August, 3rd of August 2022, so that any litigation which is going on can be considered on the lines that has been clarified, or in case you have done any kind of payment, or in case you have done any kind of reversal with respect to certain transactions that has been illustrated over there, or in under the various clarification that has been provided in the last financial year, you have still time in your hand to rectify them, to make the amendment required with respect to those tax that has been paid or any ITC that has been reversed. So this is the high time when you have to go back to your books of accounts and you have to map them. So with this, I'm winding up my session because I tried to brief or summarize all the issues that has been taken up by my learned speakers during their deliberation. And I hope everything has been crystal clearly explained on each and every critical issues that really require your kind attention before this financial year comes to an end. So I'm opening the forum for the question answer session. Thank you so much.
Thank you, Archana ji. May I request speaker like Simran, are you available? If you can switch on your video and audio. Pavan ji and Archana ji. There's okay. Shivam is not there and Tushar is not there. Okay.
अगर सुबह तक का भी कल
Hello. Yeah,
I think
Nandaji,
Simran is not. She's coming. I think. Yeah. Please.
Yes.
okay.
I want
Simran,
to take the photo also for print screen.
Okay. So all the three speakers has opened their video and audio. So some of the question answers we can take, which is there in question answers box. So maybe I can post queries to each of the speaker and they can respond back. There is some Madhav. From below, I'm reading the questions and answers. So answer I'm expecting from Simran first. Simran, this question is to you. We have wrongly taken GST. We have wrongly might be he might have wrongly reversed his GST as per rule 38, 42 and 43. Section 17.5 instead of others in January 23. Can we correct in February 23? So what I'm getting from his query that he has wrongly reversed as per rule 38, 42, 43 and section 17.5 instead of others. Can he correct it in the month of February? That's his query.
Yes, sir.
It is
Madhav sir, I've got you, query. Like you have reversed it under wrong heads. Am I correct?
you won't be able to speak, Simran, you won't be able to speak to him, but you can just, see yourself and give the answer.
Yeah. So Madhav sir, you can very well adjust it if you have mentioned it under wrong head in one month. Then you can adjust it in another head and show correct reflection in the next month in 3B.
Okay, perfect. Pavanji, question for you. There's some Jabir contractor. He has posted two back-to-back questions. First, he's saying how to ensure input avail but not utilized. And second question, how to prove that incidence of tax has not been passed to buyer for unjust enrichment. If you can reply to him.
So firstly, how to ensure that credit availed but not utilized is only the electronic credit ledger, that the credit which is in dispute should always be in the closing balance of the electronic credit ledger. As also, I think the government has issued the circular on this, that how to check it. So whatever disputed credit is, that from the dispute date till today, it should be in your closing balance. Second, how to check unjust enrichment can be checked from financials, and there could be a different aspects of it. So the government generally assumes that where you have not charged the tax, you have charged it inclusive of tax. So they always have a point that you have passed on the incidence. As far as ITC refund is concerned, they say if you have availed the ITC, so and you have taken care in your costing, etc. So you have definitely passed on the burden to your recipients. So it can be checked from financial, and it is a very subjective question depending on the actual facts based on which you are asking the question. Sir.
Okay. Archana ji, question for you. Though it was referred to Pavanji, but I'm passing on to you. Maya is asking this question. She's saying to Mr. Pavan, you have advised that we must ensure that ITC should be reconciled with GSTR 2B. But certain ITC is not allowed, for example, car expenses. The GST here is usually substantial but cannot be availed. Please advise. Archana ji?
So, may I?
Yes.
Yes, ma'am, you are absolutely correct. There are certain figures appearing in your GSTR 2A, which are very lucrative but are not eligible. So now the new 3B form talks about the same. You have to put it in a particular tab, and then you have to show out of those amount which you have punched in, what is the amount which is not eligible, because car repair in your given example pertain to section 17 subsection 5. So you have to punch in that amount in the column where reversal has to be mentioned. So
Okay. Similar to you, some Goski, he's saying if GST apply on goods which are outside India but purchased in India without movement, and what about vice versa? Simran, this question is clear to you?
Sir, I'm not able to get the question correctly.
Maybe Simran, he's asking that whether GST applicable on goods which are outside India. Let's take an example so that we can understand. Let's say if you understood it, then you can reply.
So if he's asking for high C sales, then yes, it's a Schedule 3 transaction and it's neither supply of goods, nor supply of services. So no GST is applicable. And in case it's some other transaction, then you can explain once. Hello.
Daily register. You got a contract from a customer located in US. Customer located in US. Now, there are two ways to do this transaction. You can pick the goods, export the goods from India to US. There's the one mode. Another mode, no, you got vendor, supplier for that particular goods in Korea. And from Korea, you are directly supplying to your customer at US. So when you are purchasing from Korea supplier, it is purchased in your books of accounts. But there is no GST leviable, including custom duty and IGST, because that is not entering into custom frontier of India. And subsequently, when you're raising invoice to your customer, there would be revenue on credit side of PL account. No GST leviable because of Schedule 3 transaction, Para 7 and Para 8. It was initially amended from 1st February 2019, but now with this budget, it is retrospectively amended from July 1, 2017. So might be that was the, I got disconnected, Simran, with you. That's the reason I responded back. I will come back with another query to you. Okay, going to next question. Some Vijay is asking, this is on pertaining to GST input tax credit, Vijay single. GST availed based on 3B, which is way more than the books of accounts. So maybe he's saying that 2B, it was 1 lakh rupees, but in my books of accounts, it was 80,000 rupees. How to rectify it? What will be the consequences if ITC availed were utilized for payment of IGST on export and taken refund? Hope query is clear, Simran.
Yes, sir. So for the first question, that is if in 2B the ITC appearing is more and in books the ITC appearing is less, then you have to check whether all the conditions that are given in section 16, that is whether the goods are received, invoices with you, all those are also satisfied before availing the ITC. So even if in 2B, there can be circumstance wherein your supplier has wrongly mentioned, the supplier has wrongly mentioned your GST. In that case also it can appear excess in your 2B. Or in the cases wherein 17.5 credit is there, in those cases also 2B will be excess than that of ITC appearing in books. So you have to apply all those checks before availing ITC in your GST returns.
And second question, Simran.
Sir, can
in case he has used this ITC, which as per him excess availed for payment of IGST on export, and he has taken the refund. So there may be two situations. Credit is correct, but availed in 3B, but lesser in the books of accounts. This is the one situation. And he has used that credit for discharging IGST and taken the refund. Another situation, he has excess avail, which is not available to him. And he has used that credit for utilization against IGST payment and taken the refund. So you may answer the second question, which is important for the audience to know.
Yeah, I understand the second question is where ITC was not available to him. Then also he has taken and used it to discharge his export liability, right?
Yes, Simran.
Yeah, so in those cases, the authorities can very well contend that the ITC which has been availed by you, that is not correct. And in those cases, they can also argue that since you have not availed correct ITC, in that case, you have not also discharged correct liability. So yeah, refund can be an issue in those cases.
So there will be two cases, Simran. First, the wrongly availed credit. Let's say this credit was not available to him, wrongly availed by him and utilized by him. So there would be interest implication on this wrong availment and utilization. And second, the refund which he has taken can be called as a erroneous refund. That may liable to be refunded back to the department. And interest implication, then again on the same transaction, that can be defended that interest would be only on one transaction, not on both the transaction, maybe. Pabanji, to you, there's some Ansariji asking one question. Our GST input is lying in Noida, UP, and there will be no invoice in near future. Can we utilize ITC from head office Delhi?
As our co-speaker has very clearly pointed out, it's not a cross charge or anything, is not a mechanism to shift your credit. If you don't have any supplies from their particular state where credit is accumulated, you cannot adjust it from other state. But definitely in future, if you have you have to enter into a transaction, then what you can plan that you can execute that particular transaction which attracts the tax liability from that particular state from where your credit is accumulated, rather than doing any wrong things of transferring the credit by raising any fake or bogus invoices to your branches. Sir.
So Pawan, not doable. Not doable, yes. Am I right?
Yes, yes.
Not doable. Of course, it's not doable. You can't do that. You can't transfer the credit lying in a particular GSTN, say A, to another GSTN under same PAN number. There is new mechanism for transfer of e-cash balance, which is being now allowed. But for e-credit, this is not permissible. Archana ma'am, to you, Archana ji, Sasank is asking one question. Group company outside India done the agreement with Microsoft India to provide services to their Indian company. Whether this considered as export of services for Microsoft India?
Sir, my understanding is, as per GST law, there is no concept of place of provision of service, because here it is governed by section 13, which says place of supply. And place of supply is defined by the location of the recipient. And who is the recipient? Who is paying the consideration? So here, I'm pretty sure the consideration will be flowing from the person sitting outside India, though my services may be consumed or may be utilized by someone who is in India. So as per my little understanding, this fall within the purview of section 13. So it will be treated as export of services because there is no concept of place of provision of service in India under GST.
Archana, I want to add some flavor to this question. And this question is coming from pre-GST also. Let's say you're providing annual maintenance contract in India at the behest of Microsoft Singapore. Now, these services are being rendered in India because if goods made available by the recipient to the supplier, and we have to see the concept of intermediary also. Who is raising invoice to whom? So maybe from these two angles, this question need to be tested. So factually, we are not here to really diagnose both the questions, but Sasank, I given food for thought that with one line query, we can't respond back, but still we tried and given our disclaimer that these two pointers would be having exposure or implication of GST chargeability. Okay, एक और क्वेश्चन, एक दो क्वेश्चन और फटाफट लेते हैं, then we will close. I'm just going down. There's one, Jabir is putting one after another question. Pavanji, question for you. Can I avail refund on closure of my company? So he want to close down his business, saying that there are certain balance lying in my credit ledger. Can I claim the refund?
There is no provision available under the GST law which allows you the refund of accumulated credit. But I have gone through one recent, last 2 years back, there is some judgment on the central excise, where the courts have on certain circumstances has allowed that because of the law change from central excise to GST. So definitely they should certainly allow the refund of the credit. But yes, there is no straightforward provision available to you under the GST law. And that is a matter of judicial discretion, that whether how they interpreted it in a longer run.
Okay, so are you saying yes or no?
Sir, I am saying that we should apply. I'm not remembering that judgment. There is one judgment of either Bombay High Court or something else, that which allowed the credit of closing balance. So we can try. We can certainly try.
This would be then a great window for all such person to take refund on closure of the business. Nevertheless, a question to Simran now, and this question coming from Krishna. Hi, sir. Our company is having both export and domestic turnover. So domestic turnover and export turnover. We are claiming refund on export without payment of taxes. So LUT model is being followed. Still, we have accumulated ITC in our books of accounts. So even after that, they are having accumulation of ITC in their books. It is increasing year on year since 2017. Our auditor, this is the question that he's having apprehension. Our auditor advising us to make a provision in our books for unutilized credit for the year ended. So maybe his auditor wanted to write off this credit, which is accumulated. Please advise us on this aspect. Your opinion really helpful for the company. शर्मा जी आपको आवाज म्यूट करनी है शर्मा जी आवाज म्यूट करें शर्मा जी आवाज
Oh, sorry sir.
Not an issue. Simran.
Yes, sir. Sir, I understand that this question is more of from books of accounts perspective, but from GST perspective, what I can solve is that you can check that whether there are cases wherein you can apply for inverted duty structure refund as well or not. Second, you can see that wherein you are in RCM transactions, if you are discharging any tax, excess tax, then in those cases also accumulated ITC can be reduced. But for the books of accounts perspective, I think the advice of statutory auditor should only be taken.
Okay.
One small point. I want to
Pavan. Yeah.
So generally, I have seen the auditors are saying that you should book it as provision, but very simple answer to auditor that this credit can be utilized at any point of time. So there is no point to make any sort of provision for this unutilized credit. Very simple.
And just to, add to both the speakers that why we should make provision in the books of accounts for write-off. We are not, of course, what Simran suggested that you can check the region of accumulation at your end, that she suggested, which is one part of the story. But second part of the story, even on export, when you're following LUT route, another option could be IGST route, and which is permissible. So as against LUT, you can follow the IGST route so that you can utilize your excess credit and get in cash, provided you're doing everything in black and white. Third situation, if something which is still left out, then there is nothing like you should write off. It can be carried forward till you close your business. So you can utilize that credit whenever you want. So I don't know in what context this question is being posted or opinion is being given by statutory auditor. Need to be checked with the factual position. Maybe last question, we have crossed 6 o'clock and all the speakers has done a very fantastic presentation today. I was only giving a theme curtain raiser presentation, but starting from Simran, followed by Tushar, then Shibam, then Pavan, and then Archana ji, all have made very good presentation. A lot of points that they have given for closure of financial year 22-23. Last question of the day, some Shankar Ram is asking, with the Archana ji aapke liye, with the erection and commissioning services needs registration within the state, shall ITC in IGST is allowed for working on machinery, plant and machinery construction? Kindly advise. So what I could understand वो बोल रहा है I'm a erection commissioning service provider. Do I really require to take registration in the state where this need to be erection commissioning of plant and machinery to be done? This is his first question. And second, he's questioning, let's say I'm taking services from some subcontractor, and subcontractor is going to charge GST to me. It would be intrastate or interstate. Credit would be available or not available. Archana ji?
Sir, in my humble opinion and little understanding, for service, you don't need to be bothering about getting yourself registered in all the states, because you can very well do your service from the one place where you are registered. Taking example of myself, being a chartered accountant, I'm registered only in Delhi. And similarly, his apprehension is in case he's procuring some services or he's procuring some other goods for the execution of his service. So he can always get an IGST amount charged on his invoices, and which is permissible because the IGST will be the place where he's registered and there is no bar. And now even department has opened a new Pandora box of litigation by allowing IGST in respect to section 12 subsection 8, even in the state where you are not registered. So let's not go into that nitty-gritty. But as per my little understanding, for the execution of service, he need not be bothering for getting himself registered.
Okay. So this is all from our side, but to add further, because all three speakers are still on and answering to you, and we can continue to really answer all the queries which is coming up in question and answers chat box. But nevertheless, we have to close also by 6 o'clock. Thanking everyone, asking Sarma ji to convey proper vote of thanks. Sarma ji.
Yes, sir. Yes, sir.
Maybe
Yes,
vote
Chairman,
of
sir.
thanks. Vote of thanks you can communicate. Am I audible, Sarma ji?
जी sir.
आप vote of thanks दे दें.
Thank you, sir. Thank you for giving this opportunity to provide the vote of thanks. As I mentioned in the starting of the program also, that ESD Chamber organizes such discussions for the benefit of industry stakeholders and the members of ESD Chamber. And we are thankful to all the participants, and more than 500 delegates participated in this program. And that is the reflection that these programs are very, very important for the industry. And our chairman, always dynamic and providing us so many insights for the ease of doing business and for the ease of compliances, and particularly for the GST, how to make it more and more good and simple tax. And we are thankful to all our participants, Madam Simran Arora, Ms. Archana Jain, Shri Pavan Arora ji, and my colleague, Mr. Nanda Gangadhar Mishra, for making it more lucrative. So we are thankful to all our participants, all our esteemed guests, and we look forward that such programs are organized in future also for the more and more benefit of our trade and industry. And we are extremely thankful to our chair, Bimal Janji, for sparing time again and again for the benefit of the members and the industry stakeholders. Thank you very much, sir.
Thank you. Thank you very much.
Thank you, sir.
Thanks, everyone.